Okay, so we will start now. Sure. Okay. See, today we are going to start with second head, that is income from salary. Total three sections are there. Section number 15, section number 16 and section number 17. Three sections done, meaning this head is over. Okay. So see, whenever we talk about the first section of any head, that first section of that head is charging section, right? So under the head salaries, the first section is section 15, that is a charging section. Then by looking at that section, we'll come to know that which income will be charged under this head. Okay. Then we'll come to section number 16. Section number 16 talks about deductions which are available out of the salary head, out of the salary income. Then 17, there are three parts: 17.1, 17.2 and 17.3. 17.1 talks about the definition of salary. 17.2 talks about perquisites and 17.3 talks about profits in lieu of salary. Okay. So all these sections we are supposed to cover. Okay. Slowly, gradually we will cover everything. Okay. Pay attention now. As I said, 15 is charging section, 16 is deductions. Three deductions are available under this head. First is standard deduction, which is available under 16 clause A, and second is entertainment allowance, deduction for entertainment allowance, that is available under 16 clause 2, and then 16 clause 3, that is deduction for professional tax paid, professional tax, or sometimes it is also known as employment tax. Okay. So whenever we talk about deductions, so there are three deductions only which are available under this head. And as I said, 17, 1 will be salary, 2 will be perquisite, and 3 will be profits in lieu of salary. Okay. Now coming to the first section of this chapter. First section under this head, that is charging section. Now please read very carefully. They are saying that the following income shall be charged to tax in the hands of the assessee under the head salary. So if you are an assessee, these incomes will be charged under the head salary. So which income will be charged? They are saying that any salary due in the current year, any salary which becomes due in the current year from your employer or former employer, even if it is received or yet receivable, but since it becomes due in this year, will be taxable in this year. So the salary which becomes due will be chargeable under this head. Due in the current year, current previous year. The salary which is paid or allowed to the assessee, meaning received by the assessee. The salary paid or allowed to the assessee, meaning received by the assessee. Whatever salary received in the year, current year, whether it is becoming due in this year or not, will be taxable in this year on receipt basis. So by this, we come to know that under this head, whatever salary which will become due in my previous year now will be taxable in my previous year. Whether it is received or still receivable will not make any difference. Yes or no? Whatever salary which becomes received, which is received in my previous year, will be taxable in my previous year only, as the income of this head will be taxable in my previous year only. Whether it becomes due in this year or not will not make any difference. So can I say salary under this head is taxable on due or receipt, whichever is earlier basis. So if the salary becomes due in this year, it will be taxable on due basis. Later on received, then again taxable later on? No, because it is already taxed on due basis. The salary which is received in my year, my previous year, then it will be taxable on receipt basis. Later on becomes due. later on becomes due, at that time will it be taxed again? The answer is no. Why? Because it is already taxed on receipt basis. So who is going to get this salary? The assessee is going to get this salary. Who is going to get the salary? Assessee. And from whom he is going to get this salary? From his employer or former employer. Meaning that the person paying the salary should be the employer and person receiving the salary should be an employee. Only then you are going to come under this head. Okay. So 3 points. First, 2 are done. Third point, they are saying any arrears of salary paid or allowed to the assessee during the previous year. So in the previous year, you are now getting the salary relating to some earlier years, which was in arrears, that you are receiving in this year. Even that arrears of salary will be chargeable during the previous year. If it was not charged earlier on due basis, then it will be charged in this year on what basis? Receipt basis. So what will be taxable under this head? Salary received by an employee from his employer or former employer. Yes or no? Whatever salary received in this year or whatever salary due in this year will be taxable in this year only. Even the arrears of salary of any earlier year which was not taxed earlier on due basis will also be charged under this head. Got it? This is section 15. Now we'll do some analysis of this. Okay, please pay attention. Now if the salary becomes due in 24-25 and it is received in the next year, when it will be taxable? 24-25. Due in this year, received in next year, due or receive, whichever is earlier due basis, will be taxable in 24-25. Yes or no? The salary is paid in 24-25, meaning received in 24-25. But it will become due in the next year. Can I say this is advance salary, which will become due in the next year, but you are receiving in advance? So it will be taxed in the year in which it is received, meaning 24-25. Later on when it becomes due, will not be taxed. Okay. Now any arrears of salary which I am receiving in my previous year, 24-25. But if it was not taxed earlier on due basis, then it will be taxed in my previous year on receipt basis. But if it was already taxed earlier on due basis and it was in arrears, I did not receive, but now I am receiving, will I again pay tax on that arrears? The answer is no. That time it will be ignored. Sure. Now the conclusion. Under this head, the payer making the payment can be any person. Can be any person. But he has to be employer. What he is paying? He is paying salary. To whom? To the payee. That means the payee should be the employee of this person. Yes or no? And for your kind information, payee will always be an individual. Payee cannot be any person. Payee can be only an individual. I can say that as an individual, I am working in some company. So I will be the employee. Individual will be the employee of a company. I cannot say company is working for me. Hello? Company can never be an employee. A partnership firm can never be an employee. AOPBOI can never be an employee. But they can be employers. So employer can be any person. Employer can be individual. Employer can be company. Employer can be partnership firm. Employer can be AOPBOI. Employer can be local authority. Employer can be any person. But the employee has to be a individual. Yes or no? Now, if individual is there who is an employee, from employer who is any person, yes or no? From employer, what is he getting? Salary. Salary. So in this head, there are two persons. One is the payer and one is the payee. Payer and payee shall be employer and employee. This is the most important thing which you have to keep in mind throughout the head. Any payment coming from a payer who is not your employer cannot be charged under this head. Okay. If you are receiving something from a person who is your employer, meaning employer-employee relationship is there, only then you will bring that payment under this head, under the head salary. Getting my point? Now the salary which they want to say, what is the meaning of salary? Anything which you receive in cash or in kind from a person who is your employer is a salary for you. So the payer is making the payment. That payment can be any payment. It can be by any name. It can be in cash or it can be in kind. What you will call that payment? You will call that payment salary only. Getting my point? So what is the meaning of salary? Salary means any sum, whatever name. I am not supposed to see the name, that by what name that payment is coming to me. Okay. That payment can be by any name. It can be bonus. It can be allowances. It can be commission. It can be basic pay. It can be wages. It can be perquisites. It can be by any name given to me. Not necessary that the payment coming to you on the name of salary only will come under this head. The payment can come on any name, but that payment should come from your employer. So if that payment is coming from your employer by any name, whether it is coming in cash or in kind, will always be treated as what? Salary under this head. Yes or no? So some payments which are given in cash. What are the examples, sir? Basic salary given, then bonus is given, commission is given, allowances, money coming in your hands. So payer giving you money, and that money will be given by these names. So it is your cash salary. It is your monetary salary. Yes or no? But sometimes your employer might give you some benefits, some things in kind. So anything which you receive from your employer, even if it is in kind, like for example, your employer has given you accommodation to stay, even that is treated as your salary. If your employer has given you motor car to drive, motor car facility, even that is your salary. If your employer has provided servants to you, domestic servants to you, even that is treated as your salary, because all these are benefits. All these are some things given in kind. Getting my point? So it can be in cash, it can be in kind. Will always be taxable under the head salary. And on what basis? Due or receipt, whichever is earlier basis. So whatever which was written in section number 15, no, we have done the analysis of that. Okay. The salary which becomes due in this year from your employer will be taxable for you under this head in the previous year in which it becomes due. The salary which you are receiving in the current previous year from your employer will be taxable under this head only during the current previous year only on receipt basis. Again, not taxed when it will be received or when it will become due. At that time, it will not be taxed. Getting my point? So it is always taxed on due or receipt, whichever earlier basis, and only once it will be taxed later on. It cannot be taxed again. Got it? Now, what is meaning of salary? Salary means anything coming from employer. Anything coming from employer by any name. But sometimes, sometimes you are getting salary. The payment is given and the name of payment is salary. But still it will not be taxed under the head salary. Why, sir? The reason is very simple. The payment is given, although the name of that payment is salary, but employer-employee relationship is not there between the payer and the pay. The most important thing, employer-employee relationship. If this relationship is there, no, only then the payment will be treated as salary by whatever name. But if relationship is not there of employer and employee, even though you are getting a payment whose name is salary, still that will not be taxable under this head. because the relationship of employer-employee does not exist. Getting my point? Sure. So now, when can you say that there is employer-employee relationship? Come on, tell me. So there are two types of contracts which are usually made between two parties, payer and the payee. Between these two parties, there are two types of contracts usually made. That contract can be an oral contract, it can be a written contract. There is no problem in that. Okay. But the contracts are of two types. One, contract of service. What did I say? Contract of service. And second is contract for service. Now, contract of service, whenever this type of contract exists between the payer and payee, that time only you can say that the relationship of employer-employee is existing. But when there is a contract for service between the payer and the payee, then there is no employer-employee relationship. There is principal to principal relationship. I'll give you one example. See, I am going to Reliance. Reliance is a very big company. Okay. They have employed me. They have given me employment. So there will always be a contract of service between me and Reliance. Under this contract, what the Reliance will say, that see Umang sir, you are supposed to do this, you are supposed to do this, you are supposed to do this. You are not supposed to do this. What you will do, we will tell you. How you will do, we will tell you. When you will do, we will tell you. We want your services as an employee. We want your services. But whenever you will be giving your services, you have to blindly follow our instructions. You cannot do anything on your own. All your activities shall be controlled and supervised by us only. Meaning you cannot exceed the authority given to you. Whatever you will be doing, whatever activities you will be doing, those activities will be in our complete control, and those activities will be in our complete control. Meaning that when you are supposed to do things, what you are supposed to do, how you are supposed to do, we will tell you. Just get the things done according to us. Getting my point? Sure. Now, for example, if I am providing my services to Reliance as a chartered accountant, auditing services, they want my auditing services, but they cannot control and supervise all my activities. You want my service? I can give you. But how I will give you, that I will decide. All my activities are not in your control and supervision. You want my service? No, I am ready to give. But how I will give, that is up to me. I know very well that how to give those services to you. You are not someone to tell me that how I am supposed to provide you those services. I am not your servant. Don't tell me like that. But here in the other case, you will be told that provide your services like this, do this, don't do this. Getting my point? So when there is complete control and supervision of the payer over your activities while you are providing your services, and that is as a result of a contract, that contract is known as contract of service. And there exists the relationship of master and servant. There exists the relationship of employer and employee. But when you are told to provide your services in a way in which you know the best, that is contract for service. Here the activities while providing services will not be controlled and supervised by the payer. Payer will get what I will deliver. Getting my point? Sure. He might be satisfied with my services or might not be satisfied with my services. Later on, if want to take the same services from others, he can take from there also. Getting my point? But in contract of service, what will happen? He will take the services in a way in which he likes. Getting my point? So this is contract of service. So whenever there is a master servant relationship, contract of service, master servant relationship between the payer and the payee, payer will control and supervise all your activities while you are giving the service to him. Then there is contract of employment. Then there is employer-employee relationship. Whatever the payer will give to the payee will be payee's income from salary. Sure. Now when the services are given, so to give those services, whatever activities are given, whatever activities are performed, on those activities, no control and supervision by the payer, then it is contract for service. There is no master and servant relationship. You cannot tell me what to do. Sorry, you cannot tell me how to do. I will do it in a way in which I know the best. Getting my point? So that is, there is no employer-employee relationship, and at that time, whatever amount the payer gives the payee cannot be payee's income from salary. It will be either PGBP income for the payee or IFOS income for the payee. Getting my point? Sure. So now a basic idea is there. Now few examples we will see so that this concept gets inside our head. Please pay attention. There is one college. In that college there is a lecturer. That lecturer is employed by that college. College tells the lecturer which class you should go, how many hours you are supposed to teach. Getting my point? What you are supposed to teach, what you are supposed to do, what you are not supposed to do. All the activities of that lecturer are under the control and supervision of that college. Meaning that lecturer has joined the college as an employee. There is contract of service. So there exists employer-employee relationship between the college and the lecturer. Now whatever amount the college will pay to that lecturer as remuneration will be taxable for that lecturer under the head salary, because payer and payee are employer and employee. Getting my point? There is a contract of service. Sure. Now that same college lecturer is getting paper setting fees and paper checking fees from the university, of which he is not the employee. University will ask you, can you please prepare few papers for us? Can you please check few papers for us? If you are ready, if you are available, you will do it. But you will do it in a way in which you know, na? There is no contract of service. There is contract for service. Getting my point? So here there is no employer-employee relationship. So whatever paper setting and paper checking fees this lecturer is getting from the university, since there is no employer-employee relationship, it will be income from other sources and not income from salary. Got it? Next one. There is a firm which gives salary to its partner. See, what is the payment? What is the name of the payment? Salary is given. So the moment you will see salary, you will bring that amount under salary head? No. This is not attempt to suicide. This is suicide only if you are doing it. Understand one thing. If I am saying that salary is given, that salary will come under this head, income from salary, only if there is employer-employee relationship between the payer and the payee. Now tell me, payer is partnership firm, payee is a partner. There is no relationship of employer-employee. Partner is the owner of the partnership firm, co-owner of the partnership firm. Yes or no? Along with other partners, he also is the owner of that firm. So if the owner is getting something from the business, if the owner of the business getting something from the business, that is PGBP income for that owner, no? So even though the firm is giving what? Salary to the partner, that salary will not go to income from salary. That salary will go to PGBP. Because the salary is not coming from as a reason of employer-employee relationship. This relationship is very important. Getting my point? Now next one. Government usually pays salary to MP, MLA, MLCs. Have you heard about member of parliaments, member of legislative assemblies, member of legislative councils? They are elected representative of people of India. Yes or no? So we have elected them to represent us. They are public servants, not government servants, but they get salary from government. So government and these MP, MLA, MLC, they don't have any relationship of relationship of employer and employee. So MP, MLA, MLCs are public servants. They are not government servants. If public gives them salary, then it is employer-employee relationship. Then that salary will be income from salary. But the public is not giving them salary. Who is giving them salary? Government. So there is no employer-employee relationship here also. This will also not go to salary. This will go to income from other sources. Now, there is a company and there is a executive director in that company. Who are executive directors? You know about the board of directors? In that board, there are few directors who are known as executive directors. And there are few directors who are non-executive directors. Executive directors are those directors who are the employees of the company, topmost employees of the company, who involved in the day-to-day operations of the company. Just like other employees come to the office every day, they will also come to the office every day. They will get themselves involved into the day-to-day activities of the company. Like other employees, they are also the employees of the company, but the topmost employees of the company becoming the part of the board of directors. Hence, they are known as directors, but they are executives of the company. They are the employees of the company. So, whenever these executive directors are getting anything from the company, in the capacity of an employee, they are getting, like they are getting remuneration, they are getting commission, etc. from the company. So, they are getting that in the capacity of an employee, because these directors, executive directors, are the employees of the company. Yes or no? So there is employee-employer relationship, and as a reason of that, whatever remuneration, commission, etc., which they will get from the company will be taxable under the head salary. Are you understanding what is happening? So in that board of directors, there are few directors who are known as non-executive directors. See, unlike executive directors, they will not come every day to the company. They are not getting involved in the day-to-day operations of the company. These non-executive directors will come to the board meetings because they are the part of board of directors. They will come to the board meeting. They will sit in the board meeting. They will share their knowledge with you. They will share their expertise with the company so that the company can take, decisions effectively and efficiently. So they help the company to take the decision, and for that they will go and attend the board meeting and share their knowledge, share their skills, share their expertise, experience, so that the company can take the decision. But they will not get themselves involved into the day-to-day activities of the company. Getting my point? What to do, how to do, when to do, all their activities are never in control of the company. So they are not the employees of the company. Getting my point? They are not the servants of the company. They are not getting involved in the day-to-day operations of the company. So whenever they will come to the board meeting, they will sit in the board meeting. For attending that board meeting, they will get board meeting fees or sitting fees. Are they receiving this in the capacity of an employee? No. Then this is not their income from salary. This is their income from other sources, because there is no employer-employee relationship. Got it? Now there is a company and the company pays guarantee commission or underwriting commission to its directors. Directors can be executive directors, directors can be non-executive directors, it can be any type of director. But now the company is paying what? Commission, underwriting commission or guarantee commission. Now tell me, this commission which is given, underwriting commission, it is given to underwriters at the time of public issue. when the company is bringing the public issue of the shares. So there is a requirement that whatever is the issue size, for example, 200 crores worth of shares are to be issued. So that is known as issue size. Minimum 90% of that, what did I say? Minimum 90% of that should be subscribed by the public, general public. Okay, so out of 200 crores, minimum 180 crores should be subscribed by the public. Only then your issue will be successful. And what if that minimum subscription 90% is not attained? The issue will get cancelled. Whatever share applications have come, the money has to be refunded then, and issue will get cancelled. And that will affect the goodwill also of the company. That is not good for any company that its issue has failed because minimum subscription has not been met, and for certain period the company cannot again come to the market to ask for money from the public. Getting my point? So in that event, that what if the company thinks that there is a risk that minimum subscription will not be matched, public might not subscribe 90%, so issue might get cancelled, yes or no? So in that case, the company goes to underwriters. Underwriter can be anyone. Even the directors can underwrite. Company will tell those underwriters that please guarantee certain portion, certain percentage of the issue size that you will subscribe in the event of what? Under subscription. So if there is under subscription, it is not meeting 90% also. So guarantee something that you will subscribe. Take the risk of under subscription. Understanding? So, for example, there is one director of the company, Mr. Mohan. Mohan says that, okay, company, don't worry. If there is under subscription, I will subscribe 5%. At least 5% of the issue size, I can subscribe. I have that much money. Don't worry. Go for public issue. And if the public is not showing confidence, public is not subscribing to your shares, I will subscribe. 5% of the issue size, I will buy. So 200 crores into 5%, how much? 200 crores into 5% will be how much? 1 crore. 1 crore, no? 1 crore, I will subscribe. No, 10 crores, I will subscribe. It is not 1 crore, it is 10 crores. I will subscribe. So what if the issue minimum subscription is not met? Now there is a risk on him. He will have to spend 10 crores and subscribe to the shares because he has already given the underwriting. So for that risk which he is taking now, he will be paid underwriting commission. Getting my point? Underwriting commission is given for risk taking. Next one, sometimes the guarantee commission is also given. What is guarantee commission, sir? Company is going to the bank to ask for a loan. And the bank is saying that we are going to give you loan. No problem in that. But what is the guarantee that you will return the loan and the interest on that? Give some guarantee. So the director is coming on behalf of the company and telling the bank that, okay, if the company is not able to pay the loan installments and interest, no, don't worry, I will pay. I will pay to the extent of 20%. 20% loan I will pay for the company. Give the loan, I am taking the guarantee. Hello? Here also the risk is taken. Are you all getting my point? Here also the risk is taken. And for that risk, what is happening? Guarantee commission is given. To whom? To that director. Now that guarantee can be given by any director. It can be executive director, it can be non-executive director, yes or no? So the company will pay that commission to that director. But that commission is not paid to provide services. That is paid because that director is taking a risk. So it will never be, it is not because of employer-employee relationship. It is because of that risk taking which he is doing. So that commission will also go to IFOS and will not go to salary. Getting my point? These are few points which can give you an idea that see, whenever there is employer and employee relationship, no, that time only the income will go to salary head. And if there is no employer-employee relationship, the payment cannot come to salary head. It will always go to any other head other than salary. It can either be PGBP or it can be IFOS. And when there is employer-employee relationship, when there is a contract of service. And what is the meaning of contract service? I've already explained. Done? What is the meaning of contract for service? I've already explained. Sure? This contract will always result into which income? PGBP or IFRS. This contract will always result into which income? Income from salary. Sure. So now the payer has to be employer, payee has to be employee. Now whatever comes now is salary for the employee. Now they have also defined the term salary. Let's see, now whatever comes is salary, but still let us make few things very clear. That if you are receiving these payments from your employer, from the payer, if you are receiving these things, then these things will be always considered as salary under this head. If the payer is giving you wages, usually given on a daily basis or a weekly basis, or sometimes it is given on fortnightly, sometimes monthly also. But the payment is coming by what name? Wages. And wages is what? The services which you provide to your employer, that is manual services. When you perform some manual work for the employer, no, and then whatever you get in return as a salary, that is not known as salary, that is known as wages. So even wages is what? Coming from your employer only, no? Hello? But that is for manual work. And because of employer-employee relationship only this is coming, then even this should be your salary only. So as per section 17(1), the term salary includes what? Wages. If wages is given, it is salary. Will be taxable under this head. Sometimes annuity or pension is also given. But that is given after the employee gets retired. Yes or no? But it is given for those services which he has given in the form of what? Employee only, no? So the services which you were giving as an employee, for those services, as a recognition for those services only, you are given what? Pension. When you retire. So after your retirement, the amount will come as what? Pension. Regular income will come as what? Pension. But that pension is because of those services only, no? Which you were performing as an employee. So even that will be treated as your salary. Getting my point? Next one, if you will get gratuity. Gratuity is also what? Gratuity is a thanksgiving payment. Employer wants to show his gratitude. He wants to appreciate your work. As an employee, whatever work you are doing, if the employer wants to give that appreciation for that work, he wants to appreciate your loyalty, he wants to appreciate your work, he wants to show his gratitude by saying thank you. He'll not just say thank you. Along with thank you, he will make you some payment also. And that payment is known as what? Gratuity. Even that is also treated as what? Salary. We are going to discuss all these things in detail later on. Okay. So now tell me, fees is given, commission is given, perquisite is given, any profit in lieu of salary is given. Even that is treated as what? Salary. So some employer is giving you fees, that is your salary. Employer is giving you commission, that is known as salary. Employer is giving you perquisite, even that is known as salary. But which perquisites are salary? They are given in 17(2). Getting my point? Employer is giving you profit in lieu of salary, even that is your salary. Which profits in lieu of salary are salary? 17(3). Got it, everyone? Now sometimes you will get advance salary also. Even that advance salary, the salary which becomes due in the next year, but you are receiving in advance in this year. Even that advance salary is nothing but salary. We call it salary only. Sometimes you get leave encashments. Have you heard about paid leaves? paid leaves. Sometimes you get leaves from your employer. Employer is saying that you can take 30 days of leave during this year and we will not deduct any salary for those 30 days. But what if you did not take those 30 days leave? So for those 30 days, you will be paid extra salary. Because even if you would not have come for these 30 days, you were supposed to get salary for these 30 days, no? So entire 30 days saved. You did not take any leave. So for these 30 days, which were your paid leaves, you will be paid some extra salary. And that is known as leave encashment, leave salary. Even that is treated as your salary. Now there are certain points, point number G, point number H, point number I, point number J. I will not discuss these points right now. When I will teach you a concept of provident fund. So while teaching you the concept of provident fund, no, I will bring you to these points. Till that time, I will not have any discussion about these points. But remember, G, H, I, J is also your salary. So what all things are your salary? Wages is your salary. Annuity or pension is your salary. Then gratuity is your salary. Any fee, commission, perquisite, profit in lieu of salary is also your salary. Number 5, any advance salary is also salary. Any leave salary is also salary. Leave encashment is also salary. G, H, I, J is also your salary. So these are the things covered as salary under this head. So whenever you are going to get these things, you are always supposed to charge them under this head only. Provided these things are coming to you from your employer. Employer-employee relationship. That is required. So as a result of that, whatever you are getting, even those things are any of these items, yes or no, they will be treated as salary only. Sure. Should I move ahead? Okay, very good, sir. Now pay attention. I hope when you'll read this part, no, you'll understand that we have already discussed something like this earlier. We have already done this in the second chapter, residential status and scope of total income. Do you remember? If you are an employee and as an employee, you are rendering your services to the employer and the services are rendered in India. Now, it is forget about that where you are receiving the salary now. If you have rendered your services in India and for that, if you are receiving the salary in India, then accrued in India, received in India, Indian income, take. But if you are rendering your services to your employer in India and for that you are receiving the salary outside India, it is covered by section 9, deemed to accrue or arise in India. So whatever may be your residential status, this will also be treated as your salary. Rendering your services as an employee in India means that it is an Indian income. Whether you are receiving salary India or outside India will not make any difference. This will always be taxable in your hands under the head salary. Irrespective of your residential status, it will be taxable under the head salary only. Because that is given for rendering services as an employee. Getting my point? Now, what if the services are rendered outside India? Come on, tell me. So, if you render your services outside India, for that services, whatever salary accrues, that is not deemed to accrue or arise in India. That is accrued outside India. But what if that salary you receive in India? It will become your Indian income. Taxable under the head salary. But what if the services are rendered outside India and for that salary is also received outside India? Then there is one exception. If that salary is received outside India by an Indian citizen from the government, then remember that salary will also be deemed to accrue or arise in India. Point number 4, it was there in section number 9. But what if services rendered outside India, salary also received outside India in any other case? So that will become foreign income. Part B, taxable only if you are ROR. But where it will be taxable? Taxable under the head salary, because we are talking about rendering services outside India as an employee. As an employee, you are rendering your services to your employer. Where? Outside India. Done? Sure. One note is given. Please read that note. This has once come in section number 9. Now second time you are seeing this. And third time it will come in allowances also. 3 times one and the same thing is given. Okay. We had discussed under section number 9 also this part. Now also I have told you. Okay. And then with allowances also you will see this. Foreign allowances in exempt category. So everyone understood till now? Tell me. Should I move ahead? Sure. Now see, there are some salaries which are exempt under section 10. Salary of foreign embassy, salary of the employees of foreign embassies, salary of an employee of foreign enterprise. Like few salaries are there which are exempt under section 10. Okay. That we are going to do later on. Okay. I am talking about these kind of things. All these things I will discuss later on. Okay. Don't worry right now. Now, diversion of income and application of income. See, before we actually move ahead, we have to, learn few small things here, because it will help us to solve the questions. Sometimes we might, commit some silly mistakes. So silly mistakes will be avoided if these few things you are aware about. Okay. There was one concept of diversion of income and application of income which I left in the first chapter. I told you that I'll be doing this concept later on with salary. So that diversion of income and application of income concept I am teaching you right now. Okay. Because these details will be used somewhere in the question also. The question can be framed incorporating these details also, these concepts. But for that you have to first understand this concept. Okay. What is diversion and what is application? See, I'll give you a small, very simple example. My grandfather was about to die. And when he was about to die, before that he made his will. In his will, he wrote that one of his buildings, which is let out for a rent of 20 lakhs, per annum, the rent from that building is 20 lakh rupees. Now, under the will, that building is given to me from my grandfather. So, grandfather has written, after my death, the building will belong to Umang. Okay. So, that building was given to me under a will. But there was a condition that whatever income which will come from this building, Umang will have to share 25% of that income with his sister. Got it? So, the property is given to me, but a condition is also applied. What condition is applied? That whatever income from that property will come, it will come on my name only, because the property is given to me. Yes or no? But out of that income, I have to compulsorily give 25% of that income to my sister. On this condition, under the will, the property is given to me. Now, how much this property is earning? How much is the rent of this property? 20 lakhs. Don't you think that entire 20 lakhs does not belong to me? Even though entire 20 lakhs coming on my name, because I am the owner of the building now. Yes or no? Entire 20 lakhs will come on my name. But out of that 20 lakhs, can I say 25%? My sister has an overriding title on that 25%. Overriding title means Means that is something which belongs to her. The moment that 25% is coming to me, that is not mine. Someone else, this income, the 25% belongs to someone else only. But it came to me. So how much I got? 20 lakhs. Out of that 25 lakhs, there is an overriding title on 25% of income. Overriding title means somebody else is having that income. Okay. Somebody else. This income belongs to somebody else. Entire income or 25%? 25%. So take 25% of 20 lakhs. How much is that? Come on, tell me. 5 lakhs. So what I will have to do now? 5 lakhs I will have to take out from 20 and give it to my sister. Sure. How much remaining with me? 15 lakhs. But wait. How much income came on my name? How much income came on my name? 20. Will I pay tax on this entire 20? Will I tell the government that this 20 lakh is my income? No. Out of this 20, 5 lakh rupees income belongs to my sister. The moment it came to me, it belonged to my sister. Yes or no? Given away to her. Diversion. Given away to her, meaning diversion of income. The part of my income which is treated as diversion of income is not my income. How much remaining? Only 15 lakhs. That is my income. That belongs to me. Yes or no? So how much income I will show as taxable? Entire 20 or only 15? Only 15. Because out of that 20, 5 lakh belongs to someone else the moment it came to me. Before that only I was knowing that whatever I will get out of that, 25% does not belong to me only. Got it? Sure? Now how much remaining in my hands? 15. Is it my income? I will have to show this 15 lakh taxable to the government, yes or no? But out of this 15 lakhs, now I am incurring some expenses. Now I am investing some money. Out of this 15 lakhs, I bought some gold. Out of this 15 lakhs, I paid my, some bills. Out of this 15 lakhs, I bought some grocery at home. Out of this 15 lakhs, I made some investments. And by doing this, only 3 lakh remains in my hands now. Tell me how much income I will have to show to the government. 3 lakh remaining after application or entire 15 lakhs I will have to say that my income is 15 lakhs. Entire 15 lakhs. Entire 15 lakhs I have to show as my income. And out of that 15 lakhs, whatever amount is spent, whatever amount is invested is my income only applied for different purposes. Application of income. What did I say? Application of income. Now for that application of income, if I am eligible to get any deductions under the Income Tax Act, then I can claim. But I cannot say that the part of my income which is applied somewhere is not my income. That is my income only applied somewhere. Hello? That is my income only used somewhere. Application means use of income. So whatever income I am using, that is my income only, no? That is my income only, no? Used somewhere. So whatever income is used somewhere, that is my income. Whatever remains also my income, and whatever I used is also my income. How much is total? 15 lakhs. I have to show 15 lakhs to the government. That government I am earning 15 lakhs. But out of that, whatever is spent by me, no, expended by me, spent by me, or invested by me, for that expenditure, for that application, if I'm eligible to get any deduction under the Income Tax Act, then later on I can take that deduction. But I cannot say that the amount which I have spent is not my income. I cannot say that. That is my income. Got it? Sure. One more example I'll give. So did you understand the difference between diversion and application? Application is my income only used somewhere. Diversion is my income which I know does not belong to me the moment it came to me. The moment it came to me, from that time only, it did not belong to me. So it went to that person to whom it actually belonged. That is diversion of income. That I will not show as my income. Getting my point? Now tell me, myself and Raj Lakshmi, we both are writing a book. So she is also an author, I am also an author. We both have written one book. Okay. This book we have given to a publisher to publish. Now publisher had promised that he will give 10 lakh rupees of royalty. How much royalty? 10 lakh. Because he will be using our content. He will be using our content, making that content, making book out of that content, and he will sell that content in the form of what? Book. And he will earn income. Because he is going to publish and sell the book, no? But publishing and selling the book requires our content. Without our content, he cannot publish and sell the book. But when he will sell the book which was created from our content, is he supposed to give us something? Yes. So he gives what? Royalty. Now he had promised that how much royalty he is going to give to both of us? 10 lakh, 10 lakh, no, 10 lakh for both of us. 10 lakh for both of us. And that publisher said that the entire 10 lakh will be given to one author. You distribute that amongst yourselves. Yes or no? Because he doesn't know that how much, Raj Lakshmi is supposed to get, how much I am supposed to get. So what he did, he gave one check of rupees 10 lakhs, entire royalty check, to me only. And myself and Raj Lakshmi, we had earlier only decided that whatever royalty will come, no, we will share half-half. Hello? And there was a contract, there was an agreement between myself and Raj Lakshmi. That, see sir, we are writing a book. Later on, there should not be a fight between us. So whatever book we are writing, by writing that book, we will get the book published and we'll get the royalty from the publisher. Out of that royalty, half will belong to you and half will belong to me. There is already an agreement. And as per the terms of that agreement, whatever royalty for that book will come, will now half belong to me and half belong to Raj Lakshmi. Now what if half was given to her? Her income. Half is given to me, my income. But what the publisher did? He gave one check of rupees 10 lakhs, total royalty for both of us, 10 lakhs. He gave one check to me only. Now tell me, in that 10 lakh, that entire 10 lakh belongs to me. Or out of that, half belongs to Raj Lakshmi. Half belongs to Raj Lakshmi. So the moment that 10 lakh came, in that 10 lakh, half does not belong to me. It has overriding title. Hello? To whom this belongs? Raj Lakshmi? Given to Raj Lakshmi. This is what? Diversion of income, not my income. How much remains? 5 lakhs, that is my income. Getting my point? Hello? But out of the 5 lakh which I am having, no now, remaining 5 lakhs, I have spent 4 lakhs. Spent, invested 4 lakhs. Only 1 lakh remaining in my hands. Now how much I should tell the government that how much is my income? 1 lakh or entire 5 lakhs? Entire 5 lakhs. But out of that, whatever 4 lakh is spent as an expense, as an investment, as an expenditure, yes or no? For that 4 lakh, if I am going to get any deduction under the Income Tax Act, then I can take it. But that 4 lakh I will have to first show as my income because that is application of income. Got it? Diversion and application. Now to make you all understand the next concept, I had to first tell you this concept. Got it? And if I would have told you this concept in the first lecture itself, in the first chapter, by now you would have forgotten. I would have to again make you all recall this thing. Okay, that's why I'm taking this thing here. Okay, now please pay attention. The same example I have given. Instead of Rajlakshmi and myself, it is X and Y. Two authors are there. Amount is also same, 10 lakhs divided half. When you read this example in the notes, you'll come to know. Don't worry. Okay, next one. Now, salary foregone. Read this part properly. Salary foregone. See what this point wants to tell you, that there is one employee who is having a salary of rupees 1 lakh. Okay. Now, for example, all the employees in the company, this month's salary, we all want to donate to some institute, donate to some NGO, or donate to some charitable institute, right? Because this time there was some flood situation, so we all want to help the people who are in need of some relief material, etc. Okay, no? So what we all decided in the company, we all employees decided that whatever salary we'll get, no, out of that salary we will donate some amount. So we all employees went to the employer and told the employer that whatever salary which becomes due for us in this month, no, out of that we are foregoing half salary, half of the amount we are foregoing, we are waiving off. Yes or no? Please give that amount to that charitable trust as a donation. Got it? So out of 1 lakh salary of this employee, 50,000 was foregone or waived off, and that was given as a donation. So this poor employee received only 50,000. Sure. So my question is, out of 1 lakh, if 50,000 is foregone, waived off, only balance 50,000 is received. So how much income this individual has to show? Only 50 which is coming in his hands, or the entire 1 lakh? Entire 1 lakh. Because you can forego something which is yours. You can waive off something which is yours. So you have waived off your 50,000 income only, no? So first that 50,000 was your income. Then you waived it off. Then you foregone and told the employer to pay that amount as what? Donation. Then only you can say, no, that 50,000 of my income I am donating. So that donation is what? Your income only, which is going away. Income used for some purpose. Income, application of income. Application of income is also your income. This is also your income. Add both of them. How much is your income? 1 lakh. So how much you will show as income, taxable income? 1 lakh. But out of that, 50,000 was donated. For that donation, you can go and take what? Deduction under ATG later on, but from your GTI. But in your GTI calculation, when you will show salary income, under the salary income, you are supposed to show full 1 lakh rupees. Getting my point? You cannot say that you are receiving only 50, so your income is only 50. No, your income is full 1 lakh. Show that 1 lakh under salary, and that will be shown in your GTI. And that amount which is shown in your GTI, entire 1 lakh, out of that 50 is gone for a donation. No, for that you can claim ATG deduction subject to certain conditions. Got it, everyone? So this is application of income. So your taxable salary will be finally what? 1 lakh. Got it? So this thing you could understand easily because you were comfortable with this concept now. Okay. Now there is one more another concept. There is a concept of surrender of salary. What? Surrender of salary. See, you are an employee. You are earning a salary of rupees 1 lakh. Out of that 20,000 you are surrendering to the central government. Rupees 20,000 of your salary you are surrendering to the central government under section 2 of voluntary surrender of salary exemption from taxation act 1961. As per this law, whatever part of your salary you are surrendering to the government, even though it is application, but still it will be exempt. This will be your exempt income. Because see, whenever I surrender some salary to the government, no, why I would be surrendering? Because I am not in need of this much amount of salary. Okay. I don't have any family with me. But still, my post is a managing director in the company. Okay. So I'll be earning the salary according to my post, no, according to my designation. So being a managing director of the company, very much reputed designation in the company, and I'm doing such kind of work, for that I should get at least 1 crore rupees of salary every year. So I'm getting 1 crore rupees of salary every year. But I'm a single individual. I don't have any family, no wife, no children. Okay. So would I require this much amount? 1 crore rupees for my survival? At the most 20 lakh, 30 lakh, 40 lakh. Come on, 50 lakhs. Still 50 lakhs will remain. What to do with that 50 lakhs? Sir, invest somewhere. Buy gold, buy land. For whom should I buy? There is no one, no. And even if I buy those things, even if I invest my extra income, who is there to enjoy that? No one. So let me surrender that amount to the government, because if it will go to the government, it will be used by the government for various purposes. It will be used for the benefit of my nation. So as per my requisition, what happened? I told my employer that out of my salary, 20% I want to surrender to the central government. Meaning that 20,000 is my income only. Out of 1 lakh, 20,000 is my income only. But since as per this law, I am surrendering that to the central government. The moment I surrender my salary to the central government, no, that part of application of income will not be treated as my income only, because there is one law in India. There is one law in India which makes the amount which I surrender to the government as exempt. I get the exemption for this income. So will I show this income as a part of my income? No, because this income is surrendered, and as per section 2 of voluntary surrender of salaries exemption from taxation act 1961, this is not my income taxable, this is fully exempt. Got it? So how much remaining with me after surrendering? Only 80. Now under the income tax act, the tax can be charged only on 80 and not the amount of salary which I have surrendered to the central government. Getting my point? Foregone is something different. That was not a statutory requirement. That is something which I voluntarily done. And for that, I am not getting any exemption under this law because I have not surrendered my salary. Here I am surrendering my salary and that amount is going to the government for the benefit of the nation. It will be used. Hence, I am getting that exemption. Got it? See, these things which I am discussing right now, no, they are hardly asked in the exams. Not asked in the exams. But since they are there in your study mat, since these points also requires a little bit of attention, because if it is asked in your main question as a small adjustment also, no, and if I have not taught you, you will not remember. At that time you will give a wrong effect over there. Because of just one information, this small information, your entire answer will be wrong. So if you have studied at least for once, no, you will remember it later. You will never see any question having this kind of information. But you just thank God that I am not setting the papers. If I would set the papers, no, I would bring such kind of small things from here and there, no, and I will try to put those things in main questions. Your fine reading and your everything which you are reading, no, you should be reading everything. See, whatever is not required, I will tell you. Okay, you are not supposed to read this. You are not supposed to do this. But whatever is there in the study material, which is relevant and which is asked by the institute, we are not supposed to leave them. Getting my point? So this was there in the ICI mat, study mat. So I have to discuss it with you. Getting my point? Sure? Now tell me this part. This concept says that salary paid after tax and salary paid tax free. There is a concept of after tax salary and tax free salary also. Now see, whenever you are an employee, assume that you are an employee, you will be earning salary. Okay. So when you are earning salary, full year you will earn salary. Your income 1 lakh, 1 lakh, 1 lakh, 1 lakh every month you will earn. Now the year will be over, assessment year will come. So in the assessment year, how much salary you are supposed to charge? 12 lakh rupees. Because every month you are earning 1 lakh rupees of salary. So in the assessment year, your income, salary income will be 12 lakhs. On that 12 lakhs, the tax will be calculated. Just imagine the tax amount which will be calculated on the entire year's income will be a big amount. And if that amount is taken from you in the assessment year at once, will you be able to pay that amount at that time? Because by the time you are getting salary, you must be spending your entire salary also. So by the time the year ends, you are left with no money. And who cares? If I will not have money, I will not pay taxes. Sure, no? So on 12 lakh rupees of income for your entire year, the government was watching you. That okay, this poor fellow is earning. Let him earn first. Let the previous year get over. In the assessment year, on the entire income of the previous year, he will come and pay tax. And in the assessment year, you vanished. You are not traceable. Or even if you are traceable, the government is asking money from you, asking the tax, that pay tax on that 12 lakh which you earned in the previous year. You say, I don't have money. Because entire money, salaried class person, loan is there, I have to pay the loan, grocery, rent, children education, entire money gets, washed out. I don't have any money only to pay. Now tell me, who will be on the losing side now? Government only, no? Even after waiting for a full year, they are not going to get any tax. So that is dangerous to wait for the entire year. And just imagine, if we are waiting for the entire year so that the tax can be collected next year, how do we run the nation for this year in which you are earning the income? To run the nation, we need money also, no? And how can we delay getting that money to assessment year? So there is a concept of TDS. There is a concept of TDS. Under that concept, the government says that, see, whenever the assessment year will come, no, that time you calculate your total income, that time you calculate your tax liability. On your total income, tax will be charged in the assessment year, but the collection will happen in the previous year itself. In small components. Pay as you earn. I've already told you this. Out of certain income, the tax will be deducted. Out of certain incomes, the tax will be deducted by the payer only at source. So who is the payer for you? Employer. Giving you salary. So your source of income is your employer, no? At source only, from your salary income, the tax will be deducted by the employer and given to us during the previous year. So you also earn the income. From that income, some tax will be deducted by your employer and that employer will give it to us during the previous year only. So you will get the income net of tax, after tax. Getting my point? So it is the responsibility of every employer to deduct the TDS. He cannot deny, because if he does not deduct, then there will be penal consequences on him. He will be treated as assessee in default. That amount of tax which he was supposed to deduct and deposit to the government will be collected from him then. Understanding? Now pay attention. Some taxes paid during the previous year, like this. Some taxes will be paid in the form of advance tax. So these two concepts, TDS and advance tax, we are going to learn later on, in the end of the syllabus. But wait, whatever tax which you are supposed to pay on your salary income later on, that gets deducted out of your salary every month. And who deducts? The employer deducts. Now, employer, after deducting that tax, give that tax to the government. Yes or no? And how much remaining? 90,000. 90,000 is your take home pay. Take home 90,000 only. How much is your income? 1 lakh. Out of that 10,000 tax is deducted. How much you are taking home? 90,000. Now my first question, how much amount of salary you will show taxable under this head? 90,000 which is take home pay, or the entire 1 lakh which is your income? Come on, tell me. Entire 1 lakh, no? Because out of that 1 lakh, no, 10,000 is your income only applied for payment of tax, your tax only. Later on, when the assessment year will come, no, in the assessment year, will you calculate your salary income? Yes. So that time, how much salary you will charge under this head? Full 1 lakh rupees. But out of that 1 lakh rupees, 10,000 you have already paid in the form of tax, no? So when you will calculate your tax liability, no? From that tax liability, take the credit of that 10,000. Don't pay that 10,000 again. But for that, you will have to first show that 10,000 as your income. So 90 coming in your hands is also your income. And your 10,000 income deducted by the employer and paid as your tax in the form of TDS. Yes or no? That is also income. That is application of your income. Your 1 lakh rupees income, out of that 10,000 deducted and gone as a tax. 1 lakh income, out of that 10,000 income gone as tax is what? Application of income. Application of income is also income. And the amount which is coming in your hands is also income. So how much is your income? This much. And what is this? 1 lakh gross amount. So always show 1 lakh rupees gross amount as your taxable income. Get it or not? But that you will be doing when there is after tax, salary paid after tax, meaning the employer is deducting TDS. But sometimes what happens, sometimes the employer will give you full 1 lakh rupees in hand. Because see, you had promised your family that I am going to some employer who is going to give me a salary of rupees 1 lakh. Now, if that employer is deducting 10,000 and giving only 90,000 to you, meaning that you are taking 90,000 at home, your family members are asking you that you were saying that how much is your salary? 1 lakh. Then how come you are bringing 90,000 home? You should bring 1 lakh rupees, no? And you are trying to make them understand that see, there is a concept of TDS, the employer has to deduct TDS, he has deducted TDS, and then the tax is paid to the government. When finally I'll calculate my tax liability in the assessment year, from that tax liability I'll get the credit of that 10,000. Those things you know, your family members doesn't know. Whatever these things you are telling to your family members, no, they are thinking that you are trying to hide something from them. That 10,000 you have spent somewhere and now you are telling them, now you are giving them the excuses. So your father started screaming on you. Your father told you that don't lie, otherwise you will be hit. Where is 10,000? And 3, 4 days, 5 days, He was completely furious on you. Your father, your mother, your family member, everyone was furious. The 10,000, no, you have bought something for yourself. 10,000, no, you have spent somewhere. 10,000, no, you and your friends would have, gone and done some party and all. And now you are giving such excuses. So one day you came to office, you told, sir, what, sir? See, this 10,000 you are deducting, because of that I'm getting only 90,000. By mistakenly, I told them the moment I joined, by mistakenly, I told them that my salary is 1 lakh. Now you are giving 90,000 by deducting TDS. Even I know that it is your responsibility to do that. But they are not understanding, sir. They want me to bring 1 lakh at home. Getting my point? So I said, no problem. Don't worry. I had promised 1 lakh, no salary. Take this entire 1 lakh at home. I will not deduct 10,000. So was the tax deducted, or without deducting tax the salary was given? Yes, without deducting the tax the salary was given. This is salary paid tax free. That does not mean that this salary is not taxable. This salary is taxable. But since no TDS was deducted, hence this is known as salary paid tax free. So how much is coming in your hands now? 1 lakh? Sure? That is 90%. In the prior example, how much was your take home pay? 90,000. That was 90%, no? Now what is your take home pay? 1 lakh. And take home pay is always after tax. Take home pay is always after tax. So last time, what was your take home pay? 90,000. That was 90% after deducting 10% TDS. Can you see? Hello? This time, how much is your pay which you are taking home? 1 lakh? No, that is after tax. That is also 90%. Now cross multiplication will be done. If 90% is 1 lakh, then how much is 10%? Now this cross multiplication will be done. 11,111 is there. Now this the employer will pay from his own pocket for you. Understanding? Because it was his responsibility to deduct TDS and then give you the amount. So government says that whatever amount you have given to your employee, no, we will consider as if you have deducted the TDS and given him the take home pay. Understanding? So how much taking home? 1 lakh. So the government will come to employer now. Pay the TDS. Can the employer say that sorry, I did not deduct the TDS? Government will not listen to anything. Government will say the moment you have paid 1 lakh, no, we will consider that you have deducted 10% TDS and you have given them what? You have given your employee 90%. So if that is 90%, the amount which you are giving to your employee is 90%, how much should be 10%? Cross multiply. On this cross multiplication, this amount comes, no. Government will assume that you have deducted 11,111 as what? TDS, and then 1 lakh is given as what? Salary. Getting my point? So accordingly, for you, now the salary will not be 1 lakh. Now it will be 1,11,111. Because see, whatever comes in your hands from the employer is also your salary. And don't you think whatever tax, TDS, which was supposed to be deducted from your salary, he is paying from his own pocket, is also a benefit for you, given by the employer only. Hello? Are you getting myself? Are you getting me? Whatever you are getting in hands from the employer is also your salary. But whatever employer pays for your benefit is also your salary, no? Because that is a benefit given by the employer to you. So your TDS he did not deduct, but from his pocket he paid 11,111. So that is your tax only, which was supposed to be deducted from your salary. But he paid from his own pocket. And since we are doing reverse calculation, no, this amount is not 10,000, this amount is 11,111. Getting my point? So how much is the gross amount? 1,11,111. Now, whenever you will get salary paid tax free, no, the government will always assume that the employer has given that after deducting TDS. After deducting what? TDS. So that is 90% only. Cross multiplication will be done. 10% will be calculated. This is TDS. Now this has to be recovered from the employer because the government will think that the employer has deducted this TDS and given 1 lakh to you. So according to the government, how much should be your salary? 1,11,111. Of that, 10%, 11,111 is deducted and the balance 1 lakh is paid to you. That is your take home pay. The government will think like that. Understanding? And under the head salary, we tax the take home pay or gross amount. In the last case, did we tax this amount or the gross amount? Gross amount. Always the 100% is charged. So in the second case, always gross amount. This will now be shown as your salary. 11,111 is also treated as your income. And 1 lakh is also treated as your income. So total is your 1,11,111. Getting my point? Now, whenever you will calculate your tax liability, no, from that tax liability, you will get the credit of 11,111 because that was your tax which you have already shown as your income and which is paid to the government. Got it? Sure. So I'll give you 1 or 2 examples. You are supposed to give me the answers correctly, okay? I'll frame some examples for you. Come on. Gross is 100, net is 10, sorry, TDS is 10 and net is 90. This is percent, huh? Okay, percentage. Now, employer is saying that your salary is 5 lakhs. Okay, and 10% is to be deducted. 10% is to be deducted, meaning how much is to be deducted? 50,000. He deducted 50,000 and he gave 4,50,000 to you. This is what? Take home. This is gross. Okay, no? So tell me, income from salary head, how much amount will be shown as taxable from this example? Everyone. Very good. 5 lakhs. Sure? In that 5 lakh, you have shown that 50 also, no? 450 which is coming in your hands and 50 also you have shown in that 5 lakhs. So 5 lakh includes 50,000 of income which is already deducted as what? Tax and gone to the government. So now whenever you will calculate your tax liability, out of that tax liability, credit of TDS will be how much? Come on, tell me how much TDS will get as credit? 50,000, everyone. So this 50,000 TDS will be allowed as credit. To that extent, again, don't pay tax. Reduce that tax. Understanding? So when you will calculate your total income, in the total income, 5 lakh rupees will be there. Tax will be calculated on the entire 5 lakh. But out of that, whatever tax you have paid as TDS, that you reduce, that we are not going to again take from you. Getting my point? Sure. Next one. Now you are telling your employer to give you this 5 lakhs in hands. So where should I write down 5 lakhs now? In the gross or in the net? In the net amount I'll write now. So if net is 90, TDS was 10 and gross is 100. 90 meaning that whatever you are taking home is 90% only. So now what amount you are taking? 5 lakhs. So write 5 lakhs here. This is salary paid tax free. TDS was to be deducted on 5 lakhs. From 5 lakhs, not deducted. Entire 5 lakhs given to you. Now your employer will have to give that tax from his own pocket. How much? If this 5 lakh is 90%, then 10% is how much? Cross multiply. 55, 555. So your salary should be 55, 555 plus 5 lakhs. That is 5 lakh 55, 555. Yes or no? Out of that 55, 555 was deducted as what? TDS, and you receive 5 lakhs in your hands. That is what government thinks. Now tell me, under the head income from salary, how much salary will be taxable now? Very good. 55, 55, 55, meaning 5 lakh 55, 555. This will be your taxable salary. Now, have you shown that amount also as your income, which was already paid as tax on your behalf to the government? Yes or no? So, when you will calculate your gross tax liability, out of that, how much credit of tax you will get? 55, 5, 55. Got it? Sure? Pay attention. The percentage which I have used here now are just for the sake of understanding the concept. On salary, the rate of TDS is not 10%. It is some other rate that we are going to learn in salaries chapter. Okay, no? Sorry, that we are going to learn in TDS chapter. But in order to make you all understand this concept and keep the calculation simple, no, the TDS rate is assumed at 10%. Getting my point? So in TDS chapter, don't tell me that, sir, in that chapter you took the rate 10%. No, it is just example I have taken 10%. Yes or no? The TDS rate on the salary is different. That we are going to learn in TDS chapter. Okay. Now see, whatever discussion we have done, no, from that discussion, one thing is very clear, that there has to be employer. The payer making the payment should be employer. And the person to whom the payment is going, means the pay, has to be employee. So payer-pay relationship should be of employer and employee. Because of this relationship, whatever amount the payer is giving, by whatever name, any sum the payer is going to give, by whatever name, whether in cash or in kind, will be treated as salary for whom? Employee. Whether the name is salary or any other name will not make any difference. It will be treated as income under the head salary. That's it. Got it? But it will be taxable on what basis? Due or receipt, whichever is earlier basis. Now let me make you all understand this concept a little bit. Due or receipt, whichever is earlier. Okay. Now pay attention. This is my previous year, 24-25. Okay. So I'll write all the months: April, May, June, July, August, September, October, November, December, January, February, and March. I have written 12 months. Done. So now, do you get salary on a yearly basis, quarterly basis, or monthly basis? Monthly basis. So what will happen? For the entire month you will work and your salary will become due. And that salary will be given to you. Sure? Salary becomes due. If nothing is mentioned, salary always becomes due on the last day of each month. If nothing is mentioned, salary becomes due on the last day of each month. Meaning, whatever work you have done for the month of April, whatever work you have done for your employer in the month of April, for that salary will become due on 30th April. Now your employer has a policy to pay you that salary 5th day of the next month. Meaning that April month salary will become due on 30th April and you are going to get that salary on 5th May. May month salary will become due on 31st May and that will be received by you on 5th June. June month salary will become due on 30th June. That will be given to you on 5th July. Likewise, every month salary will become due on the last day of that same month, but it will be paid on the 5th day of next month. Assumption, example, some employer can give you the salary on 3rd day of the next month. Some will say that it will be received on the 7th day of the next month. Yes or no? But in our example, due as on the last day and paid on the 5th day of the next month. Now tell me, April salary becoming due on 30th April, received on 5th May. It is becoming due, then it is received. Due or received, whichever is earlier. So April salary, due basis, it will be taxable. Yes or no? Every month salary will be taxable on due basis only. Ayo, because due is becoming before the salary is received. Yes or no? So tell me, April month salary become due on 30th April. Meaning this year only, no? Hello? Taxable in this year. May month salary becoming due in this year? Taxable in this year. June month salary becoming due in this year? Taxable in this year. Likewise, July, August, September, October, November, December, January, February, all month salary becoming due in this year only, no? So will be taxable in this year only. Tell me about March month salary. March month salary, no? This will become due here on 31st March. But don't you think that it will be received in the previous year? Next previous year, meaning previous year 25, 26, in the month of April. In the month of April, it will be received on 5th April. Tell me. So this year's March salary becoming due in this year only, but it is received in the next year. When it will be taxable? Due basis this year only, because due is happening prior to receipt. Hello? Understood, no? Sure? Perfect. Now I'll twist this example a little bit. For example, if they are saying that salary for every month becoming due on the 1st of the next month. So April month salary will not become due on 30th April. It will become due on 1st May. And it is paid on 5th May. May month salary will not become due on 31st May. It will become due on 1st June and will be paid on 5th June. July month salary will not become due on 31st July. It will become due on 1st August and it will be paid on 5th August. Still, due is becoming prior to receipt. Due is happening, no? Hello? Salary becomes due prior to its receipt. So all the month salary will be taxable on due basis only because it is becoming due prior to its receipt. Yes or no? So April salary due in this year on 1st May, taxable in this year. May month salary becoming due in this year on 1st June, hello, will be taxable in this year. July month salary becoming due in this year, 1st August, hello, will be taxable in this year. Every month salary will become due in this year only. But tell me, what about March month salary? March month salary will become due on 1st April. And this will be received also on 1st April. So due or received, whichever is earlier. Even March month salary will be taxable on due basis. But it is not getting due in this year. It is getting due in the next year. So it will be taxable on due basis in the next year. So tell me, how many months salary becoming due in this year? 24, 25. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Because this March month salary becoming due next year, no? So will be taxable in next year, no? These many months salary becoming due in this year. So will be taxable in this year. So how many months are there? 11 months. But don't you think last year March salary for 23, 24 will become due in this year and will be received in this year. So will be taxable in this year. So last year March till this year February, all the salary which becomes due in this year will be taxable in this year. This year's March will become due in the next year, will be received in next year, so will be taxable in next year. But last year's March, like this March is becoming due in the next year, last year March would have become due in this year, no? So on due basis, last year's March salary will be taxable in this year. Got it? This is due or receive, whichever is earlier. Sure, easy, no? Now see, we will be making one format. Can you see this format on screen? Read this format properly. There is no sequence. First of all, tell me. We had a fixed format to calculate house property income. We cannot shuffle the things over there. Here, there is no fixed format. Whatever becomes due in this year from your employer, whatever is received in this year from your employer, bring everything and put them in the format. Put them in this statement. Basic, bring in this format. Arrears of salary, bring in this format. Advance salary, bonus, commission, perquisite, allowances, return, everything, whatever becomes due in this year or whatever is received in this year to you from your employer, make one statement, bring everything in this statement. Out of this, some amount will be exempted, not taxable, forget them. But the taxable part of those things have to be written here only. Now add all of them, you will get what? Gross taxable salary. What you will get? Gross taxable salary. All your employees during the year giving you these things, add all of them. Yes or no? Gross taxable salary, you will get 3 deductions. Final amount is net taxable salary. This is the way in which the salary statement will be made. Just do one thing. In the assessment year, when you will calculate your total income, in that total income, you are supposed to calculate salary. So whenever in the assessment year, you will be computing the salary income, compute in this manner. But for that, you will have to check that in the previous year, what all things became due in the previous year, what all things became received during the previous year, bring all those things under the salary statement in the assessment year. And which all things can be there? Basic salary can be there, arrears of salary can be there, advance salary can be there, bonus, commission, fees, then it can be perquisites, it can be retirement benefits, it can be any other payments coming. Bring everything. And then total. Total is what? Gross taxable salary. From that you will get 3 deductions under section 16. After claiming those 3 deductions, whatever remains no net taxable salary. That is nothing but the income under this head. Sure. So one by one, we will discuss about these things. Once we complete the discussion of the statement, no, this entire chapter will be over. So one by one, every item we will discuss. Tax treatment we will discuss. Once the discussion is over, chapter will be over. Majority of the time will be spent in this, and some time on this. So right now only I am telling you these things: allowances, perquisites, and retirement benefits. Most important part of this chapter. Without these three things, don't expect a question on salary. So you have to have full command over these three things: allowances, perquisites, and retirement benefits. If you know all these three things properly, no, salary will be a piece of cake for you. Very easy. And actually it is easy. We are not supposed to do anything. Bring the amounts under this head, tax it. That's it. Whatever amount coming to you from your employer, no, all those amounts are your taxable salaries only. But sometime for your salary, no, you get some exemptions. So while doing some payment, we'll see that out of this income, how much is exempt. That part we will exempt, but the balance which will remain taxable, no, the taxable amount will bring under this head here. Got it? Sure? Shall we move ahead? Okay. Okay. See, the first thing which we are going to discuss is basic salary. During the previous year, if your employer giving you basic salary, is it your income? Yes. Fully taxable. That's it. But what is basic salary? Basic salary is a minimum amount of salary which your employer has promised to you for your services, based on your qualification, based on your experience, based on the work which you are going to do. A bare minimum amount which you will definitely get from your employer. You are going to get more things. Other than this, some other things will also be given to you. But this is the basic minimum which you are going to get for your services. Okay? So this is known as basic salary. Always fully taxable. Always. On due or receipt. Whichever is earlier basis. Done, no? Now, see, gross basic is always taxable. Always you will charge gross basic as taxable. Why I am saying that? Because see, if your employer had promised that he is going to give you gross amount of 1 lakh as salary, but when the month ended, you went to your employer and you asked for the basic salary, you asked for the salary, your employer gave you only 80,000 in your hands. So you said, sir, you told me that you are going to give me 1 lakh rupees. Now after the month end, I'm coming to you asking for my salary. You are going to give, you are giving me only 80,000. So where that 20,000, sir? So your employer says, see, there is PF contribution to be done for you. You are supposed to make contribution to your PF, Provident Fund. So that is supposed to go from your salary. Do you remember you took some loan from me in the past? So some installment of that loan I adjusted from your salary. Some professional tax you are supposed to pay to the state government. That professional tax also I deducted from your salary will be given to your state government. Then some insurance is taken for you, life insurance. So the premium of that life insurance will also be deducted from your salary so that it should be paid. Government has told us to deduct the TDS also. So that TDS also we have deducted. So there are many things for your benefit should be paid. But that should be paid out of your salary, no? So just imagine if the full amount of salary will be given, you will spend the full amount of salary. And these type of payments, these type of contributions, you will not do. You will say that month end the money got over. Understanding? So there are certain requirements on me. And as a result of that, I have to deduct these amounts from your salary and use it for different purpose. Loan installment, provident fund, life insurance premium, professional tax, TDS, blah, blah, blah. And after doing all those things, 80,000 remains. Take this 80,000. Got it? See, whatever amount got deducted from your salary, first of all, it was your salary only. Got deducted and applied for different purpose. This is nothing but application of your income, friends. Application of income is also your income. And whatever comes in your hands is also your income. So how much is your income? Total, no? Gross amount. So always charge this gross amount as a taxable salary, taxable amount under the head salary in the hands of the employee. Sure? Everyone, will you remember this? Now sometimes in the exam they will give you gross amount directly. So nothing doing, pick up the gross amount, show it taxable, that's it. But sometimes they will deliberately give you net amount, net basic. And they will definitely tell you that these amounts were deducted from your salary. And the net amount you are getting this much. What you will do? Net amount plus the amounts got deducted. Both you add, you will get the gross amount. You will always charge gross amount under the head salary. Will you remember? Sure. This is basic salary done. Okay. Now, sometimes they are not going to give you the basic salary amount per month directly. That during the previous year, 24-25, see this is 50,000 basic salary per month. They will directly give you. But sometimes they are not going to give you this amount also directly. They will, make you work hard to get that monthly basic salary. You'll have to first determine, you'll have to first identify that from April to March, how much I am getting as a basic salary. So there is one system, grading system, which is usually followed by many big organizations, big companies. Like for example, if I say Indian Railways there are lakhs and lakhs of employees in Indian Railways working for Indian Railways. SBI you talk, thousands and lakhs of employees in SBI. Punjab National Bank, thousands of employees. Then if we talk about Reliance, thousands of employees. Tata, thousands of employees. Now just imagine, to manage this manpower, to manage this human resource is a very, tough job for any HR department. So what that HR department does in any company, the human resource department, that classifies the employees into different grades. Some organizations will be having a grade 1, grade 2, grade 3, grade 4 employees. Likewise, the employees will be divided into different grades. This is known as grading system. So why that is done? That is done for a simple reason, that the employees will be graded, means there will be a group of these employees who are falling in this grade. They will be having a salary paid in this scale. There will be a salary scale fixed for them. For example, the salary scale is 20,000, 1,000, 25,000, 2,500 and 40,000. This is a scale which I am referring. So if you are falling under a particular grade of employee, okay, so there will be a salary scale fixed, that in this grade, minimum this much amount of salary per month you are going to get. And maximum this much salary per month you are going to get. This is a scale. And your salary, if you are in this grade, your salary will be ranging from 20,000 rupees per month to 40,000 rupees per month, depending on the fact that how old are you in this grade, how much time you have spent as an employee in this grade. The more older you are in this grade, the more your monthly salary will be. And once your salary is there, for example, you entered this grade, at that time the minimum salary which you are supposed to get in this grade was 20,000 per month. So for the first year of your service, you are going to get 20,000, minimum 20,000. Then for the second year, you are going to get an increment Because see, after every year, the employee will expect that his salary should increase, no? So for the second year, you will get an increment of rupees 1000 so that your salary becomes 21,000. Third year also, you will also get the increment of 1000, your salary becomes 22,000. Then again 1000, 23, again 1000, 24, again 1000, 25. When your monthly salary will be 25,000, then for the next year, you will get the increment of 2,500. Now your salary increments will be not 1000, it will be 2,500, 2,500. So in the next year, your salary will become 22,500. Sorry, 27,500. Then 30,000. Then 32,500. Then 35. Then 37,500. Then 40. And you are here. So for these many years, you will be working in this grade. For the first few years, you are going to get an increment of 1,000. And once you reach 25,000, you will still be in this grade. But the annual increments will be 2,500. Till the time you are not reaching the monthly salary of 40. Now you have achieved 40,000 salary. Now you are due for your promotion. You will be promoted to higher grade, which will have different salary scale. Getting my point? Everyone. Now, if you are joining in a particular grade, no, in that particular grade, this will be the scale. And along with this, there will be certain benefits which will be prescribed for that grade. That you are going to get a house, you are going to get car, you are going to get servants also. If you are in this grade, this will be scale and these will be the benefits. And the more older you will become, the more salary you will get, but that will be in this scale, and the more benefits you will start getting from the employer. So that no employee can complain that this particular employee is getting more than me and I am getting less. But we both are managers only. Bloody, you both are managers, but look at him. He has spent how many years? 8 years in the company. And you have just joined last year. And you are comparing yourself with him. See, your and his salary is in the same range only. But the more older he becomes, he gets more salary compared to you because he is more experienced. He has spent more time. The more benefits he is getting. Why? Because he is more older than you. He is more experienced. So that the manpower, the human resource, the employees can be managed properly. Nobody should feel that we are, we are not recognized. The employer does not, give us the proper treatment. Employer is biased. This does not happen in such huge organizations where huge number of employees are there. So see, for example, if in the question, you understood now what is grading system, okay? So if in the question they are telling you that Mr. A has joined X Limited, a company, on 1st of December 2022. He has joined on 1st December 2022. Okay. And in the salary scale of this, that means when he joined that company placed him in a grade which had this scale. Getting my point? But at the time of joining, what was his salary? It is not given. So we will assume that whatever is the minimum amount of this grade, no, he has joined at that amount. So in the first year of his service, which will start from 1st December 2022 till 30th November 2023, he will get 20,000 salary. Hello, sir. Second year of his service will start from 1st December 23. 1st December 23, and second year of his service will be till 30th November 24. Don't you think here he will not get 20, he will get 21, because after 1 year of service he is supposed to get 1,000 rupees of increment. Hello. So next year of service he'll get salary of 21,000 per month. Now he is entering in the third year of his service. Again he'll get 1,000 rupees of increment. So from 1st of December 2024, his third year of service will start and he will get an increment of 1,000. His salary will become 22,000. Then 23, then 24. But we are not going to go that far. Now we are supposed to identify my previous year is 24, 25. Come on, tell me. Don't you think Previous year 24-25 will start from 1st April 2024. That will come between 1st December 23 to 30th November 24. Between these two dates, the 1st April will come. My previous year will start. And my previous year ends on 31st March 25. And don't you think between these two dates, 31st March 2025 will also come, my previous year will also end. And I am supposed to calculate the salary for my previous year. So now tell me, starting from 1st December, my salary is 21,000. So can I say, in the beginning of my previous year, April month also, my salary was 21,000? Hello? From April to 30th November, my salary was 21,000 in the previous year. And in my previous year only, on 1st December, I entered in the third year of my service and my salary got increased to 22,000. So from 1st of December till 31st March of my previous year, I am earning a salary of 22,000. Now can you calculate? 1st April to 30th November, 8 months are there. For these 8 months, I'll get 21,000 salary. Hello? And from 1st December to 31st March, there are 4 months. And for these 4 months, I'll get salary of 22,000. Got it? I will get the total basic salary for my previous year like this. And if you don't calculate this amount correctly, no, forget about getting marks in this question. Because all the other amounts will be based on basic salary. Certain percentage of basic salary given as DA. Certain percentage of basic salary given as bonus. All those amounts will be wrong if basic salary calculation is wrong. And in this part, we have assumed that the salary becomes due on the last day of each month. Meaning April salary is how much? Come on, tell me. April salary is how much? 21. May, June, July, August, September, October, November. All the month salary is 21,000. Becoming due as on the last day of that month only. So April salary becoming due in this year. May salary becoming due in this year. June salary becoming due in this year. July, August, September, October, November. 21,000 for these 8 months becoming due in this year. So will be taxable in this year. Now tell me, December to March, 22,000 salary. December salary also becoming due in this year. January salary also becoming due in this year. February, 22,000 becoming due in this year. March also becoming due in this year. So this entire 22,000 for 4 months becoming due in this year. Hence taxable in this year. Hello, sir. So 1,68,000 plus 88, you will get 2,56,000. You will write down salary statement, basic salary. You will make such calculation over there. Total amount, outer column, 2,56,000 taxable. That's it. Will you be able to do it? But can I just put a small twist over here? What if instead of last day of each month, they would have told you salary of every month becomes due on the 1st of next month? What you would have done? So this year's April salary till November become due on the 1st of next month. Yes or no? Still they are getting due in this year only, no? April salary due in May, 1st May, this year only. May salary due on 1st June, this year only. June salary due on 1st July, this year only. Likewise, November salary, which was 21,000, April to November salary also 21,000, no? November salary will become due on 1st December, this year only. December salary due on 1st January, this year only. January salary, 1st February, becoming due in this year only. February becoming due on 1st March, this year only. But wait, March month, how much is the salary? Will become due on 1st April next year. So don't take March month salary. Only take till February. Getting my point? So how many months here? 3 months. But don't you think this year March becoming due next year? So last year March will become due in this year. So here don't take from April, take from March. So this will not become 8, this will become 9. Getting my point? 9 into 21. This amount will be different. And 3 into 22. This amount will be different. This amount will not be 256 anymore. This will be 2,55,000. Got it? This is the second case. See, this I was discussing with you. Becoming due on the first day. See, these kind of small things, they will definitely give you in the exam if they want to make your paper a little bit difficult. They will make your life miserable. You will not understand bloody what is happening in your life. In paper, you'll be lost somewhere if you are not knowing these concepts. And these are very easy concepts. If you pay a little bit attention, solve few questions on these things, 100% there is not a single question which can put you in trouble in salary. Very easy head. But the content is too much. So there are many things to remember. Understanding? Now tell me, in both the examples which we saw, did you notice something? Employee joined on a particular date, but at the time of joining, what was his salary? In this scale, what was his salary? It was not fixed earlier. So we had to take minimum amount. But sometimes they might tell you like this. Come on, see. Mr. A, same example copy paste. Okay. The first example which was there, salary becomes due on last day, multiplied by 8, multiplied by 4. Yes or no? Same example copy paste. But what here they had not given that at the time of joining how much salary was fixed. Okay, no? So what we have taken 20,000. So we started our calculation from 20,000. Yes or no? Same example. Now they can give you like this. See, example number 3. What is the difference? Also assume that salary at the time of joining was fixed at 24,000. Now if you will start your calculations from 20,000, no, your answer will be wrong. Now you will have to start the calculation from 24,000. Got it? So at the time of joining means from 1st December 22 onwards, your salary is fixed in this slab, but not 20. Within this slab, 24,000 is there, no? They have fixed your salary 24,000. But that is within this slab only, no? Before 24, before 25, 24,000 is fixed. So once first year you will get salary of 24. Next year increment will be 1,000 so that your salary becomes 25. Hello? And once your salary becomes 25, then you will not get an increment of 1,000. Then you are going to get an increment of 2,500. So for the next year of service, your salary will not be 26. Your salary will now be 27,500. Rest everything remaining same. Got it? Easy? No, made easy. Say thank you. Now see. Second example, can you see? Second example, copy, paste. We are supposed to do 9 months and 3 months, no? 9 and 3 will remain same only. Logic remains same. But instead of starting from 20,000, we will now start from 24,000. Hello? Please check. Same example 2 is copy paste, but I have made an assumption. Salary was fixed at 24. So first year of service 24, second year of service 1,000 increment, it becomes 25. Third year of service, it becomes 27,500. And for my previous year, 1st April 24 to 30th November, 8 months are there, but I will take last year's March also, because last year's March salary will become due in my previous year, 1st April. Hello? So last year March, how much was the salary? Last year March, the salary was 25,000, because from December till November, the salary is 21. So March salary was 21 only. April salary is 21 only. May, June, July, August, September, October, November. For 9 months my salary is 21, which is becoming due in this year. Now from December my salary becoming 27,500. Hello? December, January, February. I will not take this March, because this March having 27,500 salary becoming due next year. So the salary for this year's March will be taxable in next year. So I will take only 3 months. Getting it? So here my total basic will be this much. So sometimes they might tell you to calculate your basic like this. You should be able to calculate your basic like this. Sure? Should I move ahead? You ask this thing to any one of your friends. Definitely they might not be knowing these things. Sure, I am sure. And ask them. If they don't know, don't tell them the answers. Laugh and go away. Sure? Okay. Now, in your statement, what was the first thing which is taxable? Basic salary. What is the second thing? Arrears of salary. Arrears means, is it this year's salary or any earlier year's salary? Earlier year. This earlier year's salary already became due and already taxed earlier. Will you write here? No. Because if you write here, tax it on receipt basis, it will be taxed for the second time, no? Why are you taxing it for the second time if you have already taxed earlier on due basis? So when are you going to write this arrear salary here and charge it taxable? If that arrears which relates to a particular year, in that year it was not taxed on due basis, then it will be taxed on receipt basis. Then only bring under the head. So during the previous year 24-25, you are getting a salary for 23-24, 22-23 and 21-22. Last 3 years salary which was in arrears, you are getting in this year, which was not taxed in those 3 years on due basis. So now in this year you are receiving the salary for last 3 years which was in arrears. You are receiving, no? Charge it in this year. Show it here. Getting my point? But sir, how is that possible? If the employee is working in 21-22, 22-23, 23-24, if he is working, he's going to get the salary. No, the salary will become due and it will be taxed. How can you say that the salary would not have been taxed on due basis? Just for an example, if I say employer had promised that every year your salary will be increased by 10%, or for example 20%. Okay, no? So I'll give you one example. See, you were working with the employer. Okay. Now this is your 1, 2, 3. And this is my previous year 24-25. Okay. So in this year you started working with your employer. 3 years back you started working. So can I say this was your previous year 21-22? This is 22-23 and this is 23-24. Okay. This year you started working. Your salary was 1 lakh over year. And your employer had promised that every year we will give 20% increment in your salary. That means next year your salary will become 1 lakh 20. Then next year again 20% increment you will get. 20% of 1 lakh 20. Hello? Will be 24,000. So next year our salary will become 1 lakh 44,000. Sure, no? Hello? What your employer did, you know? He gave you salary 1 lakh for this year. But for the second year, no? You were supposed to get 120, no? He told you that financial condition is bad. Will not give you 1 lakh 20. Take 1 lakh if you want. If in future the financial condition of the company will become good, no? This 20,000 which we were supposed to increase, which we did not increase, later on it will be given. So for the second year also you got 1 lakh. So did you get 20,000 less? Tell me. 20,000 less you got. And in the third year also he gave you 1 lakh only. So this year you got 44,000 less. Hello? Now in 24-25, no? You are supposed to get an increment. Sure. Still you are supposed to get an increment. Now 1,44,000 into 20%, 28,800. So you are supposed to get 1,72,800 if I am not wrong. Please check. 1,44,000 into 20%, you will get 1,72,800. Okay, no? You are supposed to get this amount. as a salary for this year. But wait, did your employer give you an increment last 2 years? No. And now you are in 24-25. Now you are fed up. You told your employer, you and other employees, you all told your employer that boss, you have to increase our salary. Otherwise, we are not going to work and will not allow others also to work. Strike. Hello? And you all sit on a strike. Getting my point? Now you all are on a strike against your employer, not working. You all are not working and you are not allowing the company also to work. You are telling your employer, bloody, you are earning too much. Now your financial condition is good. Okay. It has become good last year only. And now we are supposed to get an increment. Again, you are trying to give us the same salary. For how many years we will take the same salary? Inflation is increasing day by day. And you are giving us the same salary which you gave 2 years, 3 years back? No, we want the increment. So employer said, okay, no problem. From this year, your salary will be increased. No, not from this year. This year you have to increase. But that increment you have to give from retrospective effect. Retrospective effect means whatever salary which was supposed to be increased in 22-23, which you did not increase, give that also. Whatever salary you were supposed to increase in 23-24, which you did not increase, give that also. And now give a fresh increment for this year also. So from this year, you will start getting 72, 170 to 800. But what about the increments of the earlier years? Will you forget? No, you will ask for that increment also. So employer increased your salary retrospectively, meaning that whatever salary which he did not increase earlier, now that salary also he is giving you. Tell me, in those years, you would have definitely paid tax on 1 lakh only, no? This 20,000 for which increment was not given only, 20,000 and 44,000 increment was not given only, you did not show this amount as your salary only. Will you show it taxable on due basis in that year, knowing that it may also come, may also not come? There was possibility, no? It may come or it may also not come. Knowing that you are charging this salary on due basis in earlier years, then you are a rock star. You would have definitely not paid tax on this amount earlier on what basis? Due basis. Now this entire amount is coming to you in this year. 64,000. Entire amount coming to you. Is it an arrears of earlier years? Yes. Not taxed earlier on due basis. Now will be taxed on receipt basis. Now you charge it. Getting my point? Everyone? Sure. Pay attention. Check arrears. This first part. This part. Employer giving arrears during the year. If tax earlier on due basis, will you again tax it? No. Then ignore. But if it was not taxed earlier, then on receipt basis, you are supposed to show it taxable. As per section 15, this is also charged in this year. Section 15, 3 points were there, no? Third point was this only. And according to this, we are charging this amount as this year's salary. Getting my point? Sure, everyone. Now tell me, advance salary can you get? Third point. In your statement, can you see advance salary? Now we are going to discuss about advance salary, then we are going to discuss bonus, and then we are going to discuss commission. So I'll not again come to this point. Okay, whatever I am discussing, whatever points I am discussing according to this statement only. Okay, so next point is advance salary. Come on, tell me, advance salary means, is it a salary for this year or next year? Next year. Next year's salary will become due if I will work for the next year. So for example, if I say that if this is my previous year, okay, previous year 24-25, April, May, June, July, August, September, October, November, December, January, February and March. This year, March month is there. In this March month now, what is happening? In this March month, next previous year is, tell me, next previous year is 25-26. April, May, June, July, August, September, October, November, December, Jan, Feb and March. Okay. Now, April, May and June of the next year. The salary for April, May and June you are receiving in March this year. See, you will go in the next year, work in the next year in April, May, June. Then the salary for April, May, June becomes due in the next year. It will become due in the next year. But you are receiving that salary in the month of March itself. So, according to section 15, what you are supposed to do? The salary which is received in this year will be taxed in this year, whether due or not in this year. Yes or no? So if that salary is not becoming due in this year, don't worry. If you have received it in this year, then also it will be taxable. Meaning that April, May, June salary, if received in this year, so will be taxable in this year only. On what basis? Receipt basis, advance salary. Now later on, when it becomes due, then will you charge it taxable again, or you will ignore? You will not taxable. You will not show it taxable in the next year because already you have shown it taxable in this year. So this is advance salary. So this year, whatever advance salary you have received, you are supposed to charge that on receipt basis. Done? This is what written over here. Please pay attention. This point. Only read till here. That's it. Only read this much. Sure? Done? Pay attention now. Now, this is previous year 24-25. In the month of February 25, you are receiving advance salary for next year in this year? No. You are receiving an advance against your future salary. This is nothing but loan which will be adjusted from your future salaries. Right now you are taking an advance and telling your employer, give me an advance against my salary. So I'll be coming to you working in the future, yes or no? Am I going to get salary from you? From those salaries, adjust this loan. But ultimately, it is a loan only, no? Is it a loan? And by the way, loan is not equal to income. Will you show it taxable? Ignore. So instead of giving advance salary, if the examiner is in a mood, different zone, and he is writing a small word, advance, shift a little bit, salary, shift a little bit, in between that two words, he will introduce one more word, against. Advance, salary, no. Advance against salary now. This is a loan. And if it is a loan, it is not your income. And if it is not your income, ignore. Because you are under Income Tax Act. Under the Income Tax Act, tax is payable on income, no? Or tax is payable on loan. Tax is payable on income. And if this is not your income, why are you bringing under salary head? Then which head it will go? Come on, tell me. Which head it will go? PGPP? Capital gain? Other sources, no head of income, because all the heads you will charge income. This is not income only. Ignore this, completely ignore. Getting my point? Now what they are telling you, that on 1st of February you are receiving advance. This is also loan only. You are getting an advance, not advance salary. Advance is what? Loan only, no? Whenever you will have money, no, that time you will return that amount. This is not to be adjusted from your salary. You have told the employer to give you a loan. That's it. And now you have not told the employer to adjust that against your future salary. Meaning that you're just taking the loan. Meaning whenever you will have that amount, no, in your hands, you will return that loan to the employer. But this is not to be adjusted from your future salary. But ultimately, this is also your loan only, no? Not your income. Ignore this also. So in the examination, they can play all the tricks to make you commit small, silly errors. If advance salary is given, then charge on receipt basis. But if advance against salary is given, or they have told that advance is given, then ignore that advance against salary, ignore that advance, because that is not income, that is a loan. Getting my point? Please pay attention. Now read this part. This part. What is this? This is a loan, not an income, hence to be ignored. Done? Now the next part, next thing which can be charged under the head salary is bonus or ex gratia. What is bonus or what is ex gratia? See, and wait, whatever meanings I'm telling you, know what is the meaning of basic salary, what is the meaning of arrears of salary, what is the meaning of advance salary, that is just to make you all comfortable with those terms, that you are knowing the meanings. That's it. Nowhere under the Income Tax Act or the paper they will be asking you that define basic salary, define bonus. No, you just have to remember the tax treatments which we are discussing right now. Taxable, then take this amount, show it taxable. Not taxable, take this amount, ignore it. That's it. You're just supposed to remember these tax treatments and not the meanings. Meaning is just given to you so that the things don't become monotonous. Otherwise, I will keep on writing. See, if you get this amount, taxable. If you get this amount, exempt. It will become monotonous. And you will not remember also. Sometimes to remember the tax treatment also, you should be knowing meanings. Getting my point? But ultimately, you are supposed to remember the tax treatments only. Getting my point? So what is bonus? Bonus is an amount given as a reward for the performance or as a goodwill gesture or on special occasions. Special occasions like Diwali is there, Pongal is there. Yes or no? On these special occasions, the employer might be happy. So he might give you some extra amount. An amount as a goodwill gesture also he can give. Okay. Some employers might give this extra amount for good performance which you are showing. So that bonus, sometimes also known as ex gratia. Either you can call it bonus or you can call it ex gratia. Any of these two words are given, understand that that is bonus only. Okay. Now the bonus is always taxed on what basis? Receipt basis under the salary head. See, the bonus may be given or may not be given as a statutory requirement, because there are laws also in India, POBA, Payment of Bonus Act. You might have heard about that law. There are laws also in India which might require the employer to pay what? Bonus. So sometimes the employer can give you as per law also, or sometimes he may give you voluntarily on his own also. Yes or no? So it will not make any difference. If bonus is given, no, whether it is given as per law or it is given voluntarily, may or may not be given statutorily, okay? But it will always be taxable on what basis? Receipt basis. If any bonus for this year, is payable, due, outstanding. Bonus is declared. Have you received it? Will not be taxable. Forget it. Whenever you will receive this, no, in that year it will be taxable. Not this year. Last 2 years bonus, employer did not give you. This year you are getting it. Taxable in this year. This year's bonus, given in this year, taxable in this year. This year's bonus, not given this year, not taxable this year. Whenever it will be given, that year it will be taxable. Will you remember? Color, red color. Please read. Bonus is taxable only on receipt basis. For all the things under the salary head, you will do due or receipt, whichever is earlier. Due or receipt, whichever is earlier. But for bonus, you will always see receipt basis. Got it? And there is a small logic for that. That bonus once declared, no, it is not necessary that the employer will definitely give it to you. Bonus is something which is given voluntarily, no, at a goodwill gesture. It is not a contractual obligation from my side. And even if I said in the contract, no, I might not give you this amount. And this amount cannot be enforced also. So anyways, if 2 months bonus has been declared, Diwali bonus, 2 months bonus, 2 months salary will be given as Diwali bonus. What if there was a big fire accident in the factory and as a result of that there was a huge losses to the company? Will that bonus be received by you or it will be cancelled? It got cancelled. You did not receive this year's bonus for 5 years. After 5 years you are getting. And just imagine if on due basis it was taxed right now. That was not good, no? And God knows when you are going to get, whether you are actually going to get it or not. So, bonus will be always taxable on receipt because till the time it is not received, no, there is uncertainty that whether it will be received or it will not be received. Getting my point? So, when it is certain, at the time when it is received, tax it at that moment only. Got it? Next one. Now, bonus for current previous year received in the current previous year, so it will be taxable in the current previous year. So bonus for current previous year received in the next previous year, so it will not be taxable in current previous year, rather it will be taxable in the next previous year. Hello. But what if the bonus of any earlier previous year not received in that year but received in current previous year will be taxable in the current previous year? Sure, no? Now comes fees and commission. Now your employer can give you fees, he can give you commission also. What is fees? What is commission? This is some extra amount given for some extra work which you are doing or for achieving or exceeding certain targets. So if the targets were given, you have met those targets or you have exceeded those targets. So you will be rewarded by giving commission. Or you are doing some extra work which were not in your scope. Okay. But still, the employer is telling you to do that extra work. Why would I do that extra work? Have you hired me to do that extra work? Why I will not do? Employer will say, please, macha, do no. I will give you some extra money. I will give you some fees. So ultimately, you are going to do that extra work for your employer only. And for that, you are going to get some fees, some commission. No. That will also be taxable under the head salary. Sometimes the commission will be given as a fixed amount on a regular basis. Fixed amount on a regular basis meaning fixed amount per month. 2000, 2000, 2000, 2000, 2000 every month you are getting. That is what? Fixed commission. Hello? But sometimes the commission can be given as a percentage of turnover or net profit. Whatever turnover you are achieving of that turnover, 5% will be given as a commission. And there are some employees who are at top level, they get commission on the basis of the profits of the company. Quarterly profits of the company will come. Every quarter the profits will be calculated. The profits will grow. Commission will also grow. Profits will come down. Commission will also come down. Turnover achieved by you will grow. Your commission will also grow. The lower turnover you will achieve, you will get lower commission. So here the amount per month is not fixed. Amount can vary. Hence it is known as variable commission. Getting my point? So you can get commission in two ways. Either one fixed amount will be given on a regular basis. That is fixed commission. And second, when the amount of commission is not fixed, it will keep on varying. It can be a fixed percentage, but that percentage is applied on some amount which keeps on varying. So your amount of commission will also keep on varying. That is a variable commission. It can be turnover based also, it can be profit based also. Yes or no? Any type of commission, when you will see, no, if it is fixed or it is variable, forget about everything, charge it under the head salary. That's it. But in many calculations, we are supposed to take turnover commission for the purpose of making the calculations. Many places, to make the calculations, we are going to consider turnover commission. That we are going to see. Okay, no? Sure. So what will you do with commission? Fully taxable, whether it is fixed or it is variable. Under the head salary. Why are you charging all these things under salary? No? You might have seen one thing. You might have noticed. Whenever I am talking about anything, no, I am making two things very clear. Whenever I am talking about anything, no, I am making two things very clear. You will not see a single amount written by me in this chapter without this. I will always write this. Because of this relationship, if this amount comes, then only taxable here. If this relationship is not there, you cannot bring this amount or any amount under this head. Under the head house property, three conditions were required. There has to be a house property. You must be the owner of that house property. That house property shall not be used by you for your own business or profession. Only on satisfying those conditions, that property was brought under that head, and the annual value of that property got taxed in that head. So here also, what is your source of income? Your employment, employer-employee relationship. Because of this source of income, whatever income is coming, you are going to bring under this income, this head, as your salary. So there it was three conditions. There were three conditions in house property. Here only one condition. Employer-employee relationship. Getting it? Sure, everyone? On satisfying those three conditions, what amount was charged under the head house property? Annual value. And on satisfying this condition, employer-employee relationship, what amount will be charged under this head? Many amounts. Basic, allowances, gratuity, bonus, commission, blah, blah, blah. Any amount. Every amount is known as salary only under this head. Getting my point? Now pay attention. An amount, okay, this is bonus, fees, commission done, allowance. Now we are going to allowances. Now this is very important part. I had mentioned also that allowances, perquisites and retirement benefits. These three things are very important to understand in this chapter. Okay. So because any question you will see, no, in the exam, you are going to get allowances, perquisites and sometimes retirement benefits also in that question. So without doing all these things properly, you are not going to go for exams. Okay. Come on. Allowances. What is the meaning of allowance? Allowance means it is a fixed amount given on a regular basis in addition to your salary. Are you getting salary 50,000 per month? In addition to this 50,000, you are going to get one more amount, meaning that salary you are getting. But in addition to this salary, you are getting one more amount. And that is a fixed amount which you are going to get regular basis. So this amount which is coming in addition to salary, which is a fixed amount which you are going to get regularly, meaning per month, this amount is known as allowance. Additional fixed amount given on a regular basis. Additional means in addition to salary. Fixed amount means the amount will not keep on fluctuating every month. The amount will remain same every month. Every month means regularly. Getting my point? So why the employer will give you allowance? The reason for giving the allowance can be any reason. Employer might give you this fixed amount to meet certain expenses which you might incur in the course of your employment. Hello? For office work, you are supposed to travel to some other city. Hello? During the entire month, you keep on traveling to different cities for office work. So traveling expenses will be incurred, no? So to meet that traveling expense, take this extra amount monthly. Traveling allowance. Hello? So to meet certain expenses of official nature, meaning that you might incur some expenses in the course of your employment while providing your services. You have to incur certain expenses in the course of your employment. Those are official nature expenses. To meet such expenses, your employer might give you this fixed amount on a regular basis in addition to salary, known as allowance. Sometimes to meet your personal expenses also, a fixed amount in addition to salary will be given on a regular basis. That is also allowance. But allowance is now given to meet your personal type of expenses. For example, your children are going to school. To meet their educational cost, your employer might give you children education allowance. Hello? Understanding? So that is your fixed, that is your personal expense, no? You and your family members, frequently you have to visit to doctor. Frequently medical expenses are happening. So to meet those medical expenses of you and your family members, your employer might give you a fixed amount on a regular basis in addition to salary, known as medical allowance. But sometimes the allowances are also given to compensate for extreme or extraordinary working conditions. They are given to you as a compensation. That see, if I am giving you 50,000 rupees of salary to work in extreme situations, you will not be motivated. I want you to go underground in the mines and start working in the mines. You will not be motivated to work in those mines if I am giving you the same amount of salary. I will have to compensate you more so that you get motivated to work in such extreme condition. Would you like to work on the ground for 50,000 per month, or you will be willing to go underground for that same 50,000? Definitely you are going to work above the ground only. If I am going to get 50,000 only to work, why would I go and work in that extreme situation? So employer is saying, don't worry, I'll give you 10,000 rupees more. 50,000 you are getting, no? 10,000 rupees more as a compensation to work underground or to work in mining area as mining area allowance. Hello. So allowance is a fixed amount given on a regular basis in addition to salary. It can be given to meet official expenses, it can be given to meet personal expenses, or it can be given to you as a compensation for extraordinary or unusual working conditions. Did you understand the meaning? Sure, it will not be asked. It is just for the sake of understanding that what is allowance and why it is given. But whatever allowances which will be given to you, no, the employer will give you allowances. You are getting these allowances from your employer. Meaning I have told you. But whatever allowances will you get from your employer is nothing but your salary. Fully taxable. What? Fully taxable. Are you going to get dearness allowance? Hello? Fully taxable. Are you going to get entertainment allowance? Fully taxable. Are you going to get any other allowance like these? Fully taxable. But there are certain allowances which you are going to get. And for those allowances, you are going to get exemption also. Which category you will remember? Come on, tell me. Taxable category? No. Every allowance is taxable. You have to remember this. Every allowance. But those allowances which are covered in this exempt category, you have to remember these only. See, odd man out, no? If this is also taxable, this is also taxable. These are many allowances which are taxable. Instead of remembering all those allowances as taxable, 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 remember only those which are exempt, which are very limited. Automatically, all other allowances will be taxable only, no? Hello, sir. So you have to remember this category. Under the exempt allowance, there are some allowances which are fully exempt. Written here. Come on. And there are some allowances which are partly exempt and partly taxable. Some amount of that allowance will be exempt and the balance will be taxable. And those are also covered in two categories. Partly exempt, partly taxable allowances are either house rent allowance or special allowances. House rent allowance is exempted under section 1013. But the special allowances will be given exemption under section 1014. Now under section 1014, certain special allowances are exempt on the basis of amount spent. And out of special allowances, some allowances are exempt based on the limits prescribed in IT rules. Wait, out of exempt allowances, no, few are fully exempt. They are these only. That's it. The list gets over here. No further discussion also. But out of exempt allowances, few are partly exempt and partly taxable. Out of that, HRA we have to do, which is exempt under section 1013A, for which I'll be discussing note 3 with you. And there are certain allowances which are special allowances. Other than HRA, there are certain special allowances for which you will get exemption under 1014. Those special allowances also we are supposed to see. But when we will be going to see those special allowances, no, which are going to be exempt under section 1014, certain allowances will be exempt on the basis of amount spent. And certain special allowances will be exempt based on limits given in IT rules. That's it. Other than this, everything is taxable. Got it? So the first allowance which you can see is dearness allowance. If the employer is giving you basic salary, in addition to basic salary, a fixed amount, regular basis, he is going to give you to meet the inflation. And that is known as dearness allowance. Got it? Fully taxable. Fully taxable. But the DA can be of two types. The DA can be of two types. Can you see this? This is your note number 1. This is for DA. Okay. So DA can be of two types. One is DA in terms and second is DA not in terms. If you get DA in terms, no, that is also taxable. And if you get DA not in terms, no, that is also taxable. Because whenever you get DA, no, DA is taxable. Hello. Whether it is in terms or it is not in terms. No difference. Or difference. Difference is there in meaning, but not the tax treatment. Tax treatment for both is same. Both are taxable only. Due or received, whichever is earlier basis. Yes or no? But meaning for both the DAs is different. I'll just tell you the meaning. Hello? And you have to remember the meaning also here. Because sometimes they will play with these words. They will not allow you to identify the DA. Identification becomes very important, that whether it is in terms or not in terms. Because somewhere in calculations we have to use in terms DA. And somewhere in the calculations both the DAs will be used, in terms as well as not in terms. Getting my point? So first understand the difference. Tax treatment is same. In terms is also taxable, not in terms is also taxable. Yes or no? But what is the difference? See, whenever your employer employs you, gives you employment, so you and your employer, you both enter into a contract, employment contract. In that contract, no, employer will write that what you all are supposed to do. What are you supposed to do? on what designation the company is taking you. What are your roles? What are your responsibilities? Everything will be written in that contract. To do all these things, the employer will give you basic salary this much. These benefits will be given. Along with that, amount equal to 50% of your basic as a DA will also be given. Are they mentioning your DA in your employment contract only? In the terms of employment contract, DA is mentioned. That is known as DA in terms, because that is a DA given in terms of contract. So the DA which is given in terms of contract and that DA which you are receiving, no, that is DA in terms. In terms of contract, it is written and given by the employer. But some DA which is not there in your contractual terms, still given to you. Employer might give you DA. It was not written in your contract, but if he wants to give you, he can give you. Hello? So the DA which he is going to give you now, was this DA written in the contractual terms as a part of your salary? Was it given as a part of your salary in your contractual terms? No. But still that DA is coming to you. That is DA not in terms. Hello? Now the DA which is given in terms, no, which was part of salary in the employment contract, yes or no? That DA will also be used to determine your salary at the time of retirement to calculate your retirement benefits. Because whenever you will retire, no, at that time you are going to get some retirement benefits from the employer. Like gratuity you will get, like pension you will get, like leave salary, etc. you will get. So at the time of your retirement, some retirement benefits you will get. So to get that retirement benefits, you have to calculate your salary. Which salary is taken, to give you that retirement benefits? Your contractual salary is considered to calculate that how much you are going to get on retirement as retirement benefits. Just imagine if the contractual salary is more, on the basis of more salary, more retirement benefits will be calculated and given to you. Yes or no? But what if your contractual salary is less? Less salary will be available to calculate the retirement benefits, so that the retirement benefits also becomes less. Getting my point? Employer will deliberately not write DA in your contract. Because if you write the DA in your contract, no, so it will form part of your salary, which will be also considered to calculate your retirement benefits. Instead of writing the DA in contract, don't discuss about DA in the contract, but tell the employee that I will give you DA. And actually giving the DA also, you will feel that even if DA is not written in my contract, still my employer is giving me. He's a good fellow. He is not a good fellow. He's a very bad fellow. Because if he would have written that DA in the contract, no, employment contract, so now it will form part of your salary, which will be considered to calculate your retirement benefit. Your salary will increase. And as a result of that, few lakh rupees extra he will have to pay. The retirement benefits are in lakhs, sometimes in crores. Getting my point? Just imagine lakhs of rupees, crores of rupees, if you are getting as what? Retirement benefit. And for that, if the salary is higher, lakhs of rupees more you are going to get as what? Retirement benefit. But what if the salary is less? Few lakh rupees or few crores rupees will come down as your retirement benefit. Ultimately, you are going to suffer that time. Right now, you are getting in terms, then also taxable, not in terms, then also taxable. But when you will be calculating your retirement benefits will be calculated. At that time, you are going to lose more if DA was not written in your contract, if it was not in terms DA. Yes or no? So the DA which forms part of salary to calculate your Retirement benefits is that DA which is written in contract. That is DA in terms. And the DA which does not form part of your salary to calculate your retirement benefits, that is DA not in terms. Anyways, any DA you are getting in this year now will be taxable for you. Getting my point? This is the first discussion about DA. Sure. Perfect. Now come to entertainment allowance. From the name only we can say that why this allowance is given. Entertainment. Whose entertainment? Yours? No. Entertainment of the clients. Hospitality of the clients. So you are an employee in my organization. Hello? You will be interacting with the clients. You will have to meet many people. Sometimes in some coffee shop, sometimes for a lunch, sometimes for a dinner to discuss about the business. Okay. So at that time, when you are going to meet those people, sometimes you will have to do their hospitality. Sometimes you have to spend for them. Where you will get that money from? Don't worry. The employer is going to give you what? Entertainment allowance. So this is given to you, given to an employee to meet such type of expenses. Yes or no? But don't worry. This is also fully taxable as your salary. So what you will do? If your employer is giving you entertainment allowance, no? Fully taxable. No exemption given. Just imagine if exemption is supposed to be given for these type of allowances, majority of the salary employees will start taking on this name. Out of 1 lakh rupees of salary, you will tell the employer, don't pay me 1 lakh rupees. Pay me 50,000 as DA and 30,000 as what? Entertainment allowance, because it will get exempt. Balance 20,000 only give me as basic. Who will pay tax then? Come on, tell me. If to meet inflation you want to give DA, no? So why are you giving it as DA? Give it as salary only, no? It can be given as salary also. To, do some entertainment expenses, hospitality related expenses, you are giving entertainment allowance. Why are you giving on the name of entertainment allowance? Give it in the form of salary only, no? You're just giving these names to deviate our attention. Will not get distracted. This is as good as your salary only, fully taxable. Got it? Now wait, if you are getting entertainment allowance, no, and you are a government employee, which employee? Government employee. First effect, government employee getting entertainment allowance, then also taxable. But the government employee who is getting entertainment allowance, he is going to get a deduction for entertainment allowance under section 16 clause 2. What did I say? 16 clause 2. 16 clause 1A, standard deduction. After that, there is one deduction, 16 clause 2. That deduction is given to government employee who are receiving what? Entertainment allowance. So are you receiving entertainment allowance? Yes. Show it taxable as a part of your gross taxable salary. So in your gross taxable salary, have you shown entertainment allowance as taxable? Yes. Now take the deduction from us, 16 clause 2. But that is available only if you are a government employee. And how much deduction you are going to get? Come on, please check. 1/5 of your basic salary. Whatever basic salary you are getting for the year, no? Entire basic salary, 1/5 of that. Or somebody will say 20%. 20% is as good as 1/5 only. Yeah? Sure, no? Some student came with a book in my last batch. In that book, here it was written 20%. Instead of 1/5, no? 20% was written. He said, sir, in your notes it is 1/5. And see, they have written 20%. What should I do with him? I could not speak anything in front of him. I said, sorry. Please rectify, make it 20%. 20% is as good as 1/5 only, no? So whatever basic is there, 20% of that, or you can say 1/5 of that. Getting my point? Or the actual entertainment allowance received by you, which you have shown taxable in your gross taxable salary. Yes or no? And third, maximum 5,000 rupees. Have I written per month? Can you see per month I have written anywhere? So this is 5,000 for the full year. Maximum 5,000. So either limit A will come or B will come or C 5,000, whichever is lower. Your entertainment allowance deduction can never be more than 5,000. If limit A is 8,000, this is 13,000 and this is 5,000. Whichever is lower, 5,000. Whatever may be your earlier two limits, 5,000 will restrict. So maximum 5,000 you are going to get as a deduction if you are a government employee. Getting my point? 5,000 is a huge amount of deduction, no? From your full year's salary. From your full year's salary, if you are a government employee, you are going to get a entertainment allowance reduction of 5,000 rupees. Huge amount, no? It is less than peanuts also. Hello, sir. And if non-government employees are getting entertainment allowance, for them it is fully taxable, no deduction under 16 clause 2. Can you see? Non-government employees saying, shit, we missed the deduction. How much? 5,000. Big amount or a very small amount. So they don't even bother. That even if government employees are getting, no, they are getting only 5,000. So if my salary is 10 lakh rupees, on the entire 10 lakh I am going to pay tax because I am not going to get 5,000 deduction. But if their salary is also 10 lakh, they are going to get a deduction of only 5,000 and then they are going to pay tax on 9,95,000. What difference will it make? Almost the same tax we both are going to pay. Because of 5,000 deduction, his taxable salary will not drastically come down. It will be almost same. Hence, they don't worry also. Not giving us deduction, no problem. Government employees getting? Yes. How much? Maximum 5,000. 1/5 of basic, actual amount received, shown taxable, yes or no? And see, maximum 5,000, whichever is lower. And why government employees are also getting 5,000? Even they should not get, no. See, whenever the government will give this type of allowance, no, to its employees, it will be given to only those employees who are actually required to spend these. Those employees who actually want these type of allowance, the government will give to them only. Government will not give this type of allowance to anyone. But in case of whom? Private sector employees, this allowance can be given to anyone. Even if that employee is not spending money on entertainment or hospitality of clients, still that amount can be given to them. And in that case, even they can claim the deduction if the deduction was available to them. So they will also get the benefit of 5,000. We don't want to give that benefit to them because they might not be actually requiring that amount, but still they are taking that amount from their employer so that they get some deduction. Yes or no? Will not allow them. But the government will give this allowance only to those employees who actually want this allowance. Where it to those employees to whom it should be actually given. Because government will not give this allowance to every employee. Getting my point? Hence, they are going to get the deduction also. But very small amount, minor amount. Okay? But wait. Do you remember 115 BSE we discussed? 115 BSE, if you are not following, only then you are going to get this deduction. But if you are following 115 BSE, no, this deduction will not be available to you also. Government employee, you will also lose this. So 115 BSE, First point for 115 BSc here in salaries chapter. Under house property chapter we saw, if you are having SOP and interest on housing loan for SOP will not be allowed if you are following 115 BSc. Do you remember? Here under the head salary, first effect of 115 BSc is coming. If you are following 115 BSc, this 16 clause 2 deduction available to government employee will not be available to them also. So if they want to claim, then they will have to forget 115 BSc. They have to shift out from 115 BSc. Then they will get the deduction. Okay. Now tell me, are you an employee? Yes. Are you getting entertainment allowance? Yes. First effect, taxable. Whether you are a government employee, then also, non-government employee, then also. But if you are a government employee, there will be a second effect. You will get the deduction under section 16 clause 2. How much? A, B, C. Whichever is lower. A is 1/5 of basic. B is actual entertainment allowance received and shown taxable. Yes or no? And C is maximum 5,000. What if you are not receiving entertainment allowance? So no entertainment allowance taxable, no deduction. You receive entertainment allowance and then take the deduction. Getting my point? But if you are a non-government employee, will you get any deduction? No. Only you are supposed to show it taxable. Done? And if you are following 115 BSc, then even if you are a government employee, you are not going to get this deduction. Now sometimes to confuse you, they will give you in the question that the entertainment allowance, you are a government employee, you are receiving 2,000 per month as entertainment allowance. So how much entertainment allowance for the full year? 2,000 into 12, 24,000. So that 24,000 you have taxed under the head salary. Okay. Now they are telling you that you are a government employee. That means you are going to take the deduction also. To take the deduction, three amounts are required. 1, 2 and 3. Can you see anywhere amount spent out of entertainment allowance is written? To take the deduction, it is not necessary that the amount should be spent out of entertainment allowance. Hello? But deliberately they will tell you that out of the 2,000 rupees per month entertainment allowance, no, you have spent 1,500 per month for entertainment and hospitality of the clients. What you will do? Underline this information. And besides that, you will write down bullshit. Because this information is trying to confuse you. Out of the entertainment allowance, if you are spending some amount, what difference will it make? Your deduction is supposed to be based on these three limits only, no? To claim the deduction, there is no requirement of amount spent. Hello? Then why it is given? To confuse you. Even if you don't spend any amount out of entertainment allowance, no, still it is allowed. Hello, sir. So, actual amount spent on entertainment out of entertainment allowance has to be ignored, completely ignored. Yes or no? Sure? Sure. Second allowance is done. Entertainment allowance done. Now let's come to exempt category. Can you see exempt category? Under the exempt category, there are certain allowances which are fully exempt. Now you are supposed to read the names. That's it. These are fully exempt allowances. But out of all these allowances, you are supposed to remember only one, which I have highlighted and which you already know. So I will write YKT. You know this. I have discussed this thing in scope of total income with section number 9. Second time I had discussed just now at the beginning of this chapter, and third time it is coming here. This is fully exempt allowance. So if you are an Indian citizen rendering services to the government outside India, and for that, if the government is paying salary outside India, that is taxable under this head. But if the government is giving you allowances or perquisites outside India, that is foreign perquisite, foreign allowance will be fully exempt, section 10 subsection 7. So will you bring such allowance under the salary head? No, because it is fully exempt. Forget it. You are supposed to bring only those allowances under salary head which are taxable, no? Taxable, then only charge under this head, then only show in the statement. But if it is fully exempt, why are you bringing it? Don't bring in the statement only. Ignore. Hello. Next one, see, sometimes some judges get allowances. Employees of UNO, UNO means United Nations Organization. So you are an employee of United Nations Organization, you are getting some allowances. If some judges are there, High Court, Supreme Court judges, they are getting some allowances. So their allowances are fully exempt. This is just a general knowledge for you. Getting my point? Sure? Because no question will give you that he is the employee of UNO, he is the employee, he is a judge, calculate his taxable salary. If these kind of questions are not being asked, so this kind of allowances will also not be given in the question. It is just for the sake of information that okay, these type of allowances are also fully exempt. Got it? So out of fully exempt category, you are supposed to remember only one. What? Foreign perquisite, foreign allowances received by Indian citizen outside India for rendering services outside India to the government. Yes or no? This you are supposed to remember. Easy, no? For fully exempt, easy. Now come to partly exempt, partly taxable. Now in this partly exempt, partly taxable category, no, there are two types of allowances. One is HRA, house rent allowance, and another is special allowance. So first we are going to discuss about HRA. Once this discussion is over, we will come to special allowances. And once we are through with special allowances, we are through with allowances. Nothing remains. Now whatever is there is fully taxable only, no? Sometimes they might tell you that you are getting medical allowance. Sometimes they are telling you you are getting overtime allowance, because all these allowances other than special and HRA are there. Okay, no? They're always taxable under the head salary. And these allowances will be given, and out of these allowances, if you are spending some money, ignore that amount spent, because the amount is to be fully taxed. If you have already taxed the entire allowance, now out of that allowance, if you are spending some money, on the basis of amount spent, you are not going to get any deduction or exemption anywhere. Getting my point? So ignore the amount spent out of these allowances also. Yes or no? Because these allowances are fully taxable. Any allowance, any cash allowance, whatever. I've just given few examples over here. Can you see? These are the examples. Because these are those allowances which are not covered in exempt category. When we learn the exempt category, we'll come to know that these are the allowances whose names are not mentioned in exempt category. Getting my point? So which names are given in exempt category? One is fully exempt. Have we done it fully exempt? Yes or no? Then we are into partly exempt, partly taxable. Now we are going to HRA. And for HRA, we are going to go to note 3. Okay? Come to note 3. Let's come to note 3. See. So, one employer is giving HRA to his employee. HRA means house rent allowance. Now, what do you understand by the name? What do you understand by the name? The employer is giving you a fixed amount on a regular basis in addition to salary on the name of what? HRA, to pay the rental expense of your house. But for that, you should not having your own house. You should what? Pay the rent also for the house. And the rent paid by you should be more than 10% of salary. Then the HRA received by you, which is your income, can be exempted under 1013A. So there is one section 1013A which says that this HRA income which you are getting, no, this HRA income will be exempted. But to get that exemption, these conditions must be fulfilled. Your HRA has to be spent as rent for the purpose for which it is given. Use it for that purpose, no. It is given to pay rent of your house, no. So out of this, pay rent of your house, and that rent should be more than 10% of your salary. And you should not be owning a house. Yes or no? You are staying in a rented house. And in that rented house, you are spending rent also. And the rent spent by you should be more than 10% of your salary also. If these conditions are fulfilled, only then your HRA income you can claim as what? Exempt. Understanding? How much exemption you will get? A, B, C, whichever is lower. A, B, C, whichever is lower. Now here the three limits A, B, C are different from those three limits which we studied for what? Which we studied for deduction for entertainment allowance. Yes or no? Those three limits are given for deduction out of gross taxable salary for entertainment allowance. Those three limits are different. Now these three limits are given for HRA exemption. Your HRA will be exempt to the extent of lowest of these three amounts. How much maximum exemption you can take? Can you take exemption more than your income? No. Exemption has to be equal to your income. Maximum you can claim the amount of income as your exemption. So whenever we'll be doing any exemption, in all the exemptions you will see my first amount will be this amount of income. So whatever HRA income you are getting, maximum that amount only you can claim as exempt. So actual HRA received. Hello. B is the limit which the government prescribes, that either 50% of your salary or 40% of your salary you have to calculate. What? Either you have to calculate 50% of your salary or you are supposed to calculate 40% of your salary. When will you take 50% of your salary? When you are paying rent in any metro city. So out of your HRA, if you are paying rent, then only you are going to get exemption. But you are going to get exemption, and to calculate that exemption, your limit B will be taken as 50% of salary if you are paying rent in any metro city. MKDC, Mumbai, Kolkata, Delhi or Chennai. But if you are paying rent out of your HRA, you are paying rent in any other city, which is not a metro city, non-metro city, then take 40% of your salary as limit B. Hello. And the last limit is rent paid minus 10% of salary. Same thing, copy paste. Rent paid should be more than 10% of your salary. Only then you are going to get exemption. Hello. So whatever rent you are paying, which is in excess of 10%, either that amount we can exempt, or we can exempt 50% or 40% of your salary, as the case may be, or we can exempt the actual HRA received by you. Lowest of these three amounts will be exempt out of your HRA, and the balance HRA will be taxable. Hello, sir. Everyone, you have to remember all these three limits. First limit, actual HRA. Second limit, 50% of salary, 40%. When to take 50, when to take 40. You'll remember 50 when the rent is paid in Mumbai, Kolkata, Delhi, Chennai, and 40 when the rent is paid in any other city. Done. Next one, rent paid minus 10% of salary. That means any rent which is in excess of 10% of your salary will be written here. And wait, this amount must be positive. What if this C limit comes negative or it becomes nil? Then this condition is not fulfilled. And if this condition is not fulfilled, you cannot take HRA exemption. Then your HRA will be fully taxable. So limit C should not come negative or it should not come nil. Limit C has to be positive. Rent paid should be more than 10% of your salary. So whatever rent which you are paying in excess of 10%, no, that extra rent is a burden for you. According to us, 10% of salary should be spent as what? Rent. So whatever rent which you are paying in excess of this 10%, no, would be a burden for you. Either that amount or 50% of your salary, which is the maximum amount, or 40% of salary, which is the maximum amount which you can pay as rent. Hello. According to us, how much maximum rent you can pay in any city? If it is a metro city, 50% of your salary you can pay as rent. That should be your rental burden. Or in any other cities, how much maximum rent you can pay? 40% of your salary. Max to max. That could be your burden. That could be your highest burden. actual burden or highest burden or actual HRA, whichever is lower. Hello. Now to calculate these three limits, don't you think what should be the salary? What should be the salary? Golden rule. Everywhere we have to apply. Wherever we will be doing the calculations. If anything else is not prescribed, no, we will always take for calculations, we will always take basic, DA in terms, turnover commission, all these three things as salary. Everywhere. So here also I will have to take basic, DA in terms, turnover commission. I will add three amounts. This is my salary. Hello. Basic, DA in terms and turnover commission for those months for which you have paid rent. HRA received for April. Hello. So for April, have you paid rent out of this HRA? Yes. So whatever basic, DA in terms and turnover commission becoming due in April, that is the salary of April. Hello. On the basis of that salary, April month's HRA will be calculated. May month I got HRA? Yes. May month I paid rent? Yes. So will I get exemption? Yes. For that, whatever basic, whatever DA in terms, whatever turnover commission gets due in the month of May, I will take that only. Hello? June? Same. July? Same. Meaning full year HRA received. Full year rent is spent. So whatever basic DA in terms turnover commission becoming due for the full year, becoming due, you have to take it on due basis. What basis? Come on, tell me. Due basis. So basic DA in terms turnover commission becoming due for the period for which I have paid rent. What period I have paid rent? Entire period, 12 months, I have received HRA. Entire period, 12 months, I have paid rent. So entire period of 12 months, whatever basic DA in terms and turnover commission getting due, I have to take that only. Whether it is received or not, I don't have to see. Whatever basic becoming due in this period, whatever DA in terms becoming due in this period, whatever turnover commission becoming due in this period, I have to take that only. Wait. Meaning that rent is paid for full 12 months. HRA received for full 12 months, rent is paid for full 12 months. Hence, I am taking the salary for full 12 months. But what if you received HRA for April to March, full 12 months you received HRA, but you paid rent only for July to March. First 3 months HRA you are not going to get exemption only, fully taxable. So will you take the salary becoming due in first 3 months for this calculation? No. If you by mistakenly taking it, that means you are trying to take the exemption for those 3 months also for which you have not paid the rent, because 50% of that salary will also be calculated. 10% of that salary will also be calculated. Getting my point? If you are not going to get the exemption for those months, why are you counting the salary for those months? For what period HRA received and paid as rent? July to March. So whatever salary becoming due from July to March, you have to take that only. That's it. Getting my point? Hello, sir? Now wait. One more thing I'll tell you. See, if arrears of any earlier year you are receiving in this year, this period, will you take it as a part of this salary? No. Why? Because that arrears does not become due in this period. I told you, basic becoming due in this period, DA in terms becoming due in this period, turnover commission becoming due in this period. Only take that as a salary. Arrears was a salary of any earlier year, not taxed earlier on due basis, taxable on receipt basis in this year under the salary statement. but don't count that arrears as a part of this salary. Getting my point? What about advance salary? Can you receive advance salary in this period? Yes. Is it taxable on receipt basis? Yes. But don't take that advance salary also as a part of this salary, because that advance salary is not going to get due in this period. It is going to become due in the next year. Hello, sir. Will you remember all these things? Now, this period's basic, this period's DA incomes, this period turnover commission becoming due in this period. You take whether you have received or whether you have not received will not make any difference. You have to take that entire basic DA incomes and turnover commission. Getting my point? So to calculate 50% or 40%, you need salary. And in that salary, what are you supposed to take? Come on. Basic DA incomes turnover commission. This is the salary. This is the salary. This is the salary. Getting my point? But this salary shall be taken on what? Due basis, and due only for the period for which the rent is actually paid. The period for which you have not paid the rent, no, for that period, ignore the basic DA incomes and turnover commission becoming due in that period. Because that period, you are not going to calculate the exemption. That period's HRA is going to be taxed fully. Getting my point, everyone? Sure. Now pay attention here. I'll make one small diagram in front of you. You'll understand. What is this, friends? Timeline. In this timeline, this is my previous year. Okay, no? So in this previous year, can I say HRA? I will write down HRA. I will write down rent paid. And I will write down salary. Salary means basic DA incomes and turnover commission. Yes or no? April, May, June, July, August, September, October, November, December, January, February, and March. Okay. For every month I am getting HRA. Okay, no? For every month I am getting what? HRA. And for every month I am paying what? Rent also. Done? So for this entire period, whatever basic, whatever DA incomes, whatever turnover commission getting due, I will take that. And I will make the calculation for the full year at once. I will not do the calculation monthly. Why, you know? Because HRA every month is same. Rent paid, amount of rent paid every month is same. Place where the rent is paid, Mumbai example, same. Basic DA incomes turnover commission, meaning the salary for every month is same. So every month HRA minus exemption taxable, HRA minus exemption taxable, every month the amounts will be same only, no? So why are you making 12 calculations? Same calculation 12 times? Make 12 months calculation together. Hello? So I told you 4 variables. 1. Amount of HRA. 2. Amount of rent paid. 3. Location where the rent is paid. City. Yes or no? And 4. Amount of salary. If these 4 things are same throughout the year, no? Calculate the HRA exemption for the full year at once. No need to make the calculation month-wise. But what if for few months HRA amount was this 7,000, then all of a sudden HRA amount was increased to 10,000. Now you cannot do the calculation for the full year together because now the HRA amount is changing. What if rent amount you have been paying 20,000, 20,000, 20,000 every month? The rent amount all of a suddenly increased and now it became 22,000. You cannot do the calculation for the full year. Now the rent amount has changed. So far you have been paying rent in Madurai, 40% of salary, because it is not a metro city. Now all of a sudden you shifted to Chennai and you started paying rent to in Chennai. Now you'll have to take 50% of salary. Now also the full year calculation cannot be done. Hello? Salary, basic DA income turnover commission is not same. Mid of the year or during the year, the amount of salary increased. You got an increment. So salary will also change. So if any of these four variables change during the year, you will not be able to make the calculation for the full year together. In that case, what you will have to do? In that particular case, you will have to make the calculations month-wise, monthly calculation. But you can do the calculation for those months together for which all the four variables are same. Yes or no? Getting my point? So we'll see this when we'll be solving the question. No, in the question only we'll see this, that what if for the full year calculated and what if monthly calculated. Both the questions we will solve. Okay. Did you understand so far HRA? Now tell me, you are employee, I am your employer. I am giving you HRA. First question, is it your income? Yes. Under the head salary, you have to bring it. You brought it under the head salary. But you came to know that, okay, this HRA is given to me as my income. I don't stay in my own house. I'm staying in someone else's house and paying rent also. And that rent paid by me is more than 10% of my salary. Will I get any exemption out of this income? As per 1013A, I will get exemption out of this income. A, B, C, whichever is lower amount, that lowest amount is the exemption. That exemption I will claim out of this income. Whatever taxable amount remains, that taxable HRA I will bring under the head salary. That's it. Got it? A, B, C. Three limits you will remember. A, actual HRA. B, 40% of salary. B is 50 or 40% of salary. C, rent paid minus 10% of salary. Please remember, C limit has to be positive. If C limit is negative or nil, meaning that rent paid is not more than 10%. It is less. Hence that limit C is negative. Getting my point? You will not get any exemption. But if C limit is positive, rent paid minus 10% of salary. So A, B, C, whichever is lower, lowest amount will be allowed as exemption. Sure. To calculate this exemption, you need to calculate salary, basic DA in terms turnover commission, and you will take the basic DA in terms and turnover commission only for that period for which you have paid the rent. And that too also in that period, whatever basic DA in terms and turnover commission becoming due, that you are only supposed to take. HRA will be fully taxable for those months for which the rent is not paid. Those months HRA fully taxable. Calculate the exemption only for those months for which the rent is paid. If rent is paid for full 12 months, calculate the exemption for full 12 months. If the rent is paid only for 9 months, calculate the exemption only for 9 months. So only those 9 months salary will be considered. Hello? During these 9 months or during the full year, if all the four factors are same, four variables are same, so make the calculation together for all those months. No need to make multiple month-wise calculation. But if during that period, if any of the four factors change, then month-wise calculation will be done. Everyone understood this much? Sure. Now wait. If you follow 115 BAC, if you follow, forget about this entire calculation. Full HRA taxable. Meaning, if you want to claim the HRA exemption, you should shift out, opt out of default tax scheme of 115 BSE. 115 BSE should not be followed. Only then HRA income can be exempted. If you follow 115 BSE, then HRA income will be taxable, fully taxable, no exemption. Got it? That is something which I have written over here. Please check. Done? Sure? Perfect. See, four factors. These four factors I said, same throughout the year, full year at once, change during the year, month-wise calculation. Okay? So HRA, you are supposed to keep in mind one question we are going to solve now. Okay? Come to one question. Question number one, illustration number one, salary head. Raj Kumar has following receipts from his employer: basic, DA, commission, motor car for personal use, expenses met by employer, okay, whatever it is, house rent allowance is getting 15,000 per month. Okay. Now find out the amount of HRA exempt. Amount of HRA exempt in the hands of Raj Kumar, assuming that he paid a rent of 16,000 per month for his accommodation at Kanpur. Kanpur is not a metro city, okay, no? So 40% of salary will be taken. Rent paid is given 16,000. DA forms part of salary for retirement benefit. The DA which forms part of salary for the purpose of retirement benefit is that DA which is written in contract, no? The DA which forms part of salary for retirement benefits is that DA, no, which is written in the contract. DA in terms they are saying. Okay. See, this way they will try to confuse you. Okay. Wait. Now Raj Kumar exercises the option of shifting out, meaning that is he following 115 BSc or not following? Not following. That means he is going to get HRA exemption. So here in this question, what I will do, please pay attention. In this question, HRA received is how much? 15,000 per month he is receiving. For how many months he is receiving? Is it given in the question? No. So we will assume that he is receiving it for the full year. Yes or no? 12 months. So it will be 1,80,000. Now out of that he is going to claim exemption under section 1013A. And why he is claiming the exemption, sir? Because he is following 115 BSc? No, he is shifting out of 115 BSc. Hence, he is claiming the exemption. Otherwise, you would have shown this amount fully taxable. Yes or no? So, A, actual HRA. That is how much, friends? 1,80,000. B, I will do 40% of salary. But for this, I will keep one line blank because I am yet to calculate salary. Okay, no? C, rent paid minus 10% of salary. Again, I will keep one line blank. Why? Because I am yet to calculate salary. Everyone understanding what is happening? Okay. See, 40% of salary and 10% of salary. So now I will first calculate salary. So for salary, I would require basic plus I would require DA in terms plus I would require turnover commission. Okay. Now tell me how much basic salary becoming due in these 12 months? 40,000. And it remains same throughout the year, no? So 40,000 into 12. 40,000 into 12 will be 4,80,000. How much is the DA? DA is 6,000 and they are saying that this is DA in terms. So 6,000 per month into 12 months will give me 72,000. Any turnover commission given in the question? No. No turnover commission given in the question. Commission they have given? Yes, 50,000 per annum. Sorry. 50,000, no? per annum. 50,000 is 50,000 is turnover commission or fixed commission? Turnover. I will assume it is turnover, because if it is fixed, per month amount would have been given. 5,000, 5,000, 5,000, 5,000, 5,000 received on a regular basis. And if they are saying per annum, so for the full year, the commission is this much. It might be what? Turnover commission. Yes or no? So now, what is the total? Come on, tell me. 4,80,000 plus 72,000 plus 50,000, 6,02,000. Yes or no? Can I say this 6,02,000 is what? Salary. So if 6,02,000 is salary, so I have to do 40% of 6,02,000 now. Into 40% will be 2,40,800. Now rent paid by me is 16,000 per month in Kanpur, and for 12 months, entire 12 months I would have paid the rent if nothing is mentioned. And 10% of salary, so again I'll take 10% of 6,02,000 only, no salary. So 10% of 6,02,000 will be 60,200, and 16,000 into 12, 1,92,000. 1,92,000 minus 60,200 will give me 1,31,800. Everyone getting this? Hello? A, B or C? Whichever is lower. Come on, which is the lowest amount? 131,800, no? So exemption under section 1039 will be 1,31,800, which I will be taking from my HRA. How much was my HRA? 1,80,000. Out of that I am taking exemption of 131,800. 48,200 will be my taxable HRA. Yes or no? Tell me yes or no. Understood? Sure? In the question, no, they have not told you to calculate taxable HRA. Please check the question. They're telling you to calculate what? Find out the amount of HRA exempt. And what you have calculated? Hello? Taxable, no? But to calculate this taxable amount, have you calculated the exemption? Yes. So they are just telling you to calculate this amount. That's it. Hello? But we have gone one step ahead. What if they would have told you to calculate the taxable amount? Then we would have calculated this amount exempt, and we would have taken the exemption out of the HRA. Then our taxable amount should have been this much. When they are asking you to calculate taxable amount, calculate this. And when they are asking you to calculate the exemption amount, calculate 131,800. Hello, sir. You have to read the question properly, huh? Okay. So this is first question on HRA. Now, when you solve this question, no, did you see that we calculated the exemption for the entire year together? Why? Because for the full year, HRA amount was 15,000. Same. For the full year, you were paying the rent of 16,000, same amount. For the full year, you were paying the rent in Kanpur only. For the full year, your salary was not changing. Basic, DA in terms, turnover commission, everything was remaining same. Hence, for every month, HRA exemption, HRA exemption, HRA exemption, the amount would have been same, no? So instead of making the same calculation 12 times, we did that same calculation for 12 months together. Hello? Now, one more question is there that I'm going to give you for homework, which I'm going to discuss tomorrow. Practice question. Question number 1. Go and check Mr. Mohit. The name of the assessee will be Mr. Mohit. Question number 1 in your practice questions, in your test your knowledge section. Did you see first question? Even that is a question on HRA. Okay. That question you are going to try at home today without looking at the solution. Okay. Don't look at the solution. Try on your own. We are going to solve that question together tomorrow. Okay. See you tomorrow. Same time. Till then, take care. Bye bye.